Energy is fire, conversation is right. If you stay tonight, baby, I might let you say all of me. Want you here, need your mind in these sheets. Completely intertwined in our minds, yeah. Tell your future like a psychic. Baby, you gon' end up right in my bed. Chemistry is science. I could play it cool, but I'd be lying. Read you like a psychic. I'ma tell you something, you gon' like it. Chemistry is science. Better than what you was fantasizing. Different kind of blue. Starry in the daytime. Found my living proof with you. I might lose all of me. Want you here, need your mind in the sheets. Completely intertwined in our minds, yeah. Tell your future like a psychic. Baby, you gon' end up right in my bed. Chemistry is science. I could play it cool, but I'd be lying. Read you like a psychic. I'ma tell you something, you gon' like it. Chemistry is science. Better than what you was fantasizing. Tell your future like a psychic. Baby, you gon' end up right in my bed. Chemistry is science. I could play it cool, but I'd be lying. Read you like a psychic. I'ma tell you something, you gon' like it. Chemistry is science. Better than what you was fantasizing.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it. Yes, we did. That's another way to think about it.
All right. What is going on, everybody, on this Stock Talk Sunday? Peace, power, and profit to all the patrons out there, all the entrepreneurs, go-getters, investors, right? Those who are pace setters and not necessarily, those who are playing from the back of the pack, right? You guys set the lead and set the pace, right? Y'all set the tone. And interesting enough, we have a big week ahead of us where we all want to be in a position where we're ahead as much as possible of all this news that's going to come out. So we're going to speak about that a little bit today, trying to discuss a little bit what the week may have in store for us. Hope you guys are prepared for it as well as I am, right? It's been a magical month of July thus far, given all the economic data, given all the different things that are surrounding the markets, and how there's been somewhat of a optimism in terms of the bullish drift that still is this hanging around the marketplace, where the market just won't quit, right? It's fighting tooth and nail to remain solvent, right? And what I mean by solvent is the fact that even though the Federal Reserve has a different agenda, markets are trying to call the Fed's bluff, right? This ideal of, don't fight the Fed doesn't resonate with the bullish drift side of the marketplace, right? Hey, but that's what it is, right? People find value in different things and they place their money wherever they feel that value is there. Right, so we'll discuss a little bit of that as well. So again, we got big tech earnings coming up as well this week. We're going to speak about that a little bit as well. Pretty sure you guys are happy about that. Why? Because it's really going to tell, the foreseen future, what that may look like in terms of how well we've contracted from a growth perspective. Why? Because the tech stocks are typically the litmus test or the bar, the archetype of what America's growth really looks like, right? Especially in relation to a lot of the other, players around the world, right? From their perspective of tech stocks or whatever, right? We know we kind of, set that bar. So when we hear the likes of Apple or Microsoft and Google and Meta, right? Facebook, and many others that may release their earnings as we Amazon, it's going to really give us a really, lucid picture exactly what that looks like in terms of, again, all those different components that make up somewhat of our GDP value, where we look at some of the major, employers, if you will, in some ways, what that looks like in terms of they're laying people off, if they're starting to cut back, slow to hire. The margin value has been affected by the value of less growth on a global scale. Are they dealing with forex currency issues where the rate exchange is now hurting them because the USD dollar is starting to spike up again, even though it's pulling back a little bit here recently. But nonetheless, a lot of that recordation of Q2 has already been under the books while the dollar was ramping to the upside, right? Which obviously have hurt tech stocks margin, right? We've been hearing it thus far with some of the early players in the game, right? A la Tesla, right? A la Snapchat. Definitely going to speak about Snapchat today because Snapchat pulled back near 40% on their earnings. Let that resonate for a moment. They pulled back 40% on their earnings, right? Now, a lot of that has to do with the idea of, again, some of those factors we spoke about, right? But nonetheless, we understand that these things are, they're not somewhat anomalies. Anyone would say, okay, well, stocks dropped nearly 40% in one day. That's supposed to be somewhat of a good read on, good management and things of that nature, being able to read the market in a way where you shouldn't have somewhat of a drastic move or like a penny stock. And this is supposed to be a top, tech stock. How does that bode well for all the other tech stocks getting ready to release their numbers, right? A lot of fear out there right now, especially for people like, Meta, right? Or Facebook, right? Also, we got the likes of Twitter and Pinterest who had earnings last week, and both of those, Twitter, I should say, not Pinterest yet, but typically all those stocks pull back as well, right? Twitter missed on their earnings. Of course, we know their excuse was based upon the Elon Musk saga, right? We're gonna get into Elon as well, right? Elon all over the place right now, right? Making all kind of enemies and frenemies, whatever. But nonetheless, the market is not short of a lot of drama right now. There's a lot of drama out there in the marketplace where you could just pick your poison, kick back, pop you some popcorn, sip your tea, right? But nonetheless, again, we're here to speak about it. We're here to do our part in trying to unpack all of it, make sense of what this market may, have in store for us for the upcoming week. As you see, of course, with the title of the description today, Sunday stock talk, big week ahead, FOMC rate hike, tech earnings, and GDP. Although there's other things as well, but we definitely want to focus on some of those because those are primary drivers for a lot of the action or price action that we may see this week, right? This upcoming week, right? So it's interesting, right? Because either somebody's going to be a bag holder this week, right? We already have enough, and we look at the bigger picture in terms of stock market, right? The big market as a whole, right? The global market as a whole is already bag holding, right? Given the fact that the level of earnings and growth we had in 2020, 2021 coming into 2022, right? Everybody's bag holding, right? Well, to the degree of, from the macro perspective, but not each individual trader, right? Especially if you're able to hedge and you've been hedging, right? All right. So it's again, a lot to unpack, right? It's a mouthful when you think about it, but hey, this is the life of an investor, life of a trader, right? It's our goal, right? And our value to be stay connected to all things surrounding the marketplace, right? A well-informed trader is a prepared trader, right? That's how this stuff works. You have to be on your grind and knowing what's going on around you as much as possible, right? Because that helps you make better decisions, right? Research methodology, right? Due diligence and discipline equals dollars, right? So we're going to speak about that again. So that's just, the gist of everything. So what I'm going to do, I'm going to get the link out too, because just in case some of you guys want to come on, I don't have a lengthy process. I just want to cover some of the major bullet points of, what's going on in around the marketplace so we can have an understanding of some of the stuff that we might want to pay attention to for the week. And from there, we can utilize that time to, either study in advance, or if you're not, if you haven't already, at least you'll know what's coming down the pipe, right? At least you'll have an understanding of what to look for or look out for, right? And so we try to provide some level of context and content, all that in one, every time we crank up this channel, right? Because this is the people's channel in that regard when it comes to stock information, where we like to be, community orientated, as we say, Ubuntu. I am, because we do this stuff together. We're peers at this. So it's a joint effort that we all add in trying to, bring value or truth to power when it comes to financial literacy, right? So with that being said, we'll get right after it, guys. So again, it's kind of coming off the first value here. I have some bullet points down in my description box. If you will, you might want to look down there. As I always try to provide some kind of level of detail, what's the topic or what we may speak about. And given that, if you look, just turn to seeing what, the first bullet point is concerning the value of, the Federal Reserve meetings, right? We know we have a big FOMC meeting this Wednesday, right? That's Wednesday, the 27th. And so that meeting in itself is like one of the biggest FOMC meetings literally over the past 2 years. All right, let that marinate for a moment. And you say, well, what do you mean the last 2 years, right? Well, truly, it's one that really determines a lot of the sentiment in terms of, every aspect of the microeconomic value when people looking at the market saying, are we at a pivotal point in terms of our data that we've been able to try to forecast, or is it, still lingering, or is it getting worse, right? Because at the mid-year perspective, because this is typically a mid-year report card. If you think about it from a place of, if you was in grade school, you get that kind of mid-year report card to see where you are, even though you're getting quarterly. This one here is that biannual assessment of where we are in terms of a marketplace, right? The extent that they already have mandates in play in terms of rate hikes, they got all this other stuff in play. We're looking at all this stuff like, okay, well, to what extent is this stuff going to be, really a problem, right? Or is it not, right? Or can we just chalk it up and say that, it's not as bad as it is. It's no big deal. Let's just kind of keep, fighting, between the Bulls and the Bears, and we'll just let the chips fall as they may, right? But no, I want to speak about that. Why? Because again, context is everything when it comes to the marketplace, right? Context is king, right? So let's get over here real quick, right? Pulling from investing.com, one of my favorite websites. Looking at some of the top 5 things to watch in the markets ahead, and what you may want to look at. If you're the type of person who's always writing stuff down, taking things to thought and the memory, and saying these are things I need to focus on, given all these different moving parts of the marketplace, so these things are of importance, then that's how you kind of go about positioning yourself, right? If you have open positions, if you're looking to put on positions, if you just want to manage them better, whatever, it's a great help to understand some of the things that may be an adverse, effect, or it could be somewhat of a fuel to some of the positions you already have in play, right? Given the decisions you've already made thus far when it comes to your portfolio or the basket of stocks that you are trading as a day trader or swing trader, right? So it says, first thing here says, Federal Reserve meeting, right? So kind of pulling from that and saying inflation reports have remained elevated, right? Of course, you guys already know this stuff, nothing new there. I'm going to blow it up a little bit just in case some of you guys might be reading from your cell phone, right? From your cellular phones, right? It says, inflation reports have remained elevated, right? And that's led just about all markets prognosticators to expect at least a 75 basis point hike, right, from the Federal Reserve, right? So we know we have been watching the Fed future fund rate, and we've been watching the betting markets try to, somewhat get ahead of idea of what we think the Feds may do in terms of their next federal rate hike, mandate value, right? This is the one when they actually say we're adding another value of rate hike, right? So it's not the speculative value of whether they will or they won't. It's that they are going to raise rates, right? But to what extent, right? So we know there's a 50, a 75, and 100 on the table. As of the latest reading, we're getting at least about a 75 percentile value of a 75 rate hike, all right, Bill's rate hike, and at least about a 20 to 30% chance of 100. Now the 100, that came on the scene kind of like after the fact, a little bit later in the, in the quarter value, given the fact that, the last CPI and the last PPI data that came out denoted that there was still values of accelerating inflation. Well, that may have just tipped the Fed's hand where they can't try to play the role of trying to be dual mandate and trying to protect the stock market, but also protect the economy, right? They got to choose one poison over the other, right? They can no longer play that game, being the fact that they put themselves in such a scenario. They backed themselves into the corner by being late in raising rates at a point when they just kept overstimulating the economy. Thus, that's how we have inflation, right? Too many dollars chasing too fewer goods. I repeat, too many dollars chasing too fewer goods, right? And so because of that, we're struggling and have to deal with that, right? So yeah, that's never great. That's never pretty, but it is what it is, right? So let's speak to that a little bit, right? So let's speak to that. So again, it says here, a 100 basis point hike was briefly on the table, and the Fed funds future prices suggested a 20% chance of that still happening. So again, just based upon the ideal probability, there's a chance that it could happen. Will it happen? If I had to take a shot at this and choose, I probably say it's about a quarter percent chance that it could possibly happen. So I don't have a lot of stock in it. And even though we may say that the 75 bips is already priced in because Wall Street likes to take the approach that, if it's bad, it's not that bad. I price it in, we'll roll from that. And from there, it won't be such a big surprise. So we shouldn't necessarily have any kind of magical sell-off, right? Well, that's the thought process behind, again, a lot of these Wall Street bulls who are, perma bulls who refuse to accept the value that we don't have the Goldilocks market that we had of 2020, right? We don't have that Goldilocks market that we had of 2021, right? It's a new day, right? As much as they want to fight the Fed and be risk on, the Fed is like, don't fight me because I got to go, and do this job of, getting inflation on the routes. Why? Because the administration, their favorability is is hanging in the fringes because of this, right? Is hanging in the fringes because of this, right? And it can get very, very, tricky and scary when you think about that, right? But hey, that's how this stuff goes, right? So yeah, as it says on the back part of this, but reports suggest that the Fed won't go quite that far. Again, that's the idea that they're thinking, that's off the table, even though it's on the table, but they feel like the markets, wouldn't necessarily be able to, sustain such a shock if the Fed chose to do that whole 100 basis point, right? The whole percentage point, basically, in terms of the treasury value, in terms of interest rates, being, hiked, that whole full, basis point hike, that would just really, tell if the Feds are serious about fighting inflation. Because as of today, the Feds have shown not to be serious about fighting inflation, right? There's nothing that they've shown thus far to be, to be taken serious, that they're serious about fighting inflation, right? So thus far, Jerome Powell still is the pimp daddy of printing dollars to like there's no tomorrow, right? He definitely receives the poster child award of the year for just constant bucking against data and just saying I'm gonna keep my foot on the pedal and just keep printing money, all right, which is crazy, all right? So being able to kind of speak to that and deal with that, that's why having some context of what we feel like these guys may or may not do is really good. Why? Because positioning matters based upon around that. Now, you don't have to be a person who, plays the probability game of day trading, right? Because that's essentially what you're doing. It's a probability game, right? It's, highly speculative in a lot of ways, right? But for the most part, again, we understand boom and bust cycles. We understand ebb and flow. We understand peak to trough, support, resistance, right? Supply, demand, right? Knowing those different peaks, or positions on the chart, right? When we're trying to itemize the value of whether we are bullish, bearish, and or neutral, right? Or neutral. Right. So that's very important to think about. Right. So it says the FOMC statement and the Fed Chair Powell's press conference will be in some ways more needle moving for the market, right? Because I look at it from this way. We're going to get some movement one way or the other this week. Now, last week was somewhat of a, enigma in a lot of ways. We had a lot of, still some of that bullish drift, trying to price in a lot of bad news. For every bad news that, article that came out last week, the market somewhat tried to shrug it off and still pump out green days, right? Eurozone, they raising their first 50 basis point rate hike in over 11 years, right? Europe, think about that. Europe was basically in there, sitting at a place where they was just kind of cruising near zero for quite a long time. Worse than, well, not worse than Japan, but, just kind of living off, the value that they don't have to raise, taxes for their citizens. They can just live at this dang near zero interest rate for so long, right? Because they make a lot of their money by parasite off of other nations, right? We talking about the value of manufacturing. The only biggest manufacturing hub that you get coming out of the Eurozone basically comes out of what? Germany, right? Cars and everything that they produce, right? They are the mechanized, brainchild engineers of that region. So saying like with America, we've basically over what, pretty much just shipped all our jobs, manufacturing value overseas, right? So now we're playing the game of being a service industry as opposed to what? A product manufacturing industry, right? Because we understand the true nature or backbone of a country is based upon the ability to harvest resources and turn those into goods that people can utilize and benefit from. Because you can control the value of open market values more, in my opinion, more readily from that perspective. But nonetheless, that's what we're dealing with here. So it says, going forward here, it says, well, as the market tries to size the possibility of a recession and how committed the Fed will be taming inflation if that recession shows up, right? So this is them measuring the fact that, again, if the Feds are serious about, fighting inflation, will they, somewhat, rate hike us into a recession, right? Them over tightening the economy, putting blockers on it, putting restrictions on the economy, would it, inevitably lead to us being in a recession, right? That's what this is all about. That's the scare of Wall Street right now, right? That the Fed at some point would have to make a hard pivot and change their mandate of fighting inflation and have to deal with the value that they don't want to have to, deal with a market that's going to go in a recession, excuse me. But some will say, it's better for the market to go in a recession as opposed to having what they call lingering inflation. Why? Because inflation is a hidden tax that hits everybody, and it doesn't just go away at the flip of a switch, right? You rather have a recession, get everybody in mind, prepare for the fact that we're going to go through what's called a contraction period, so they can start planning in advance. They can stop, wasting good resources on trivial things, and by way of that, we can kind of work our way through this and upgrade our level of production where we need to in the right place, and we can work ourselves out of recession. And by way of that, by killing all of that demand, because we're not going to spend money on trivial stuff, that kills that aspect of inflation, right? But the Feds are trying to be, I don't know, maybe Gandalf or something, or Lord of the Rings or something. Like, you can't have it both ways, right? You can't be one wizard and try to also be therapist and money printer. You can't do all of it at once, basically. Right. So that's the problem that we have with the Feds. And plus, a lot of the credibility is shot at this point anyway. Right. That's another conversation. All right. So it says with talk already of rate cuts coming next year, the phrase threading the needle is sure to come up a few times this week. Why? Because, the Feds went from transitory to not so transitory. Okay. Well, we do have a little bit of stagnant inflation hanging out the system, but it won't necessarily lead to recession. So maybe it won't be that value of a hard recession, and now we just don't know what they're going to come up with, right? Given the fact that inflation lingers. So their talking points thus far have shown that they have no read on this scenario of a global financial pandemic that they've somewhat insulated themselves in by printing all this money, not just in America, but Europe as well, right? Some parts, Asia as well, Bank of Japan as well, right? So this is a global effort by central bankers that got everybody jacked up right now, right? And we know that some nations are hurting more than others. And what's going on, Oprah Brand? That's the partner bill. You kind of get through my little, breakdown first. We'll get into it, right? Peace, power, profit. You have to have you in the building as always. Our brother Brandon in the house. Shout out to everybody on the YouTube side as well. Oprah Chris, right? Oprah, who we got? Brother Divine in the building. Brother Matt's in the building. Anybody might be listening that necessarily can't type. Shout out to you as well on this Sunday. Hope you're doing well. Hope your family, your friends, your health and well-being is great as well, right? Shout out to you all, right? So again, as you see, that's the first bullet point of interest. We want to speak to that. Why? Because as we say, these are things that are of importance. You want to follow and focus on data that, in my opinion, if you are a person who's, in the day-to-day action of marketplace, even though that really doesn't, denote the overall big picture, right? From a quarter to a, biannual to a fiscal calendar, but it just shows you some semblance of how people are affected by, certain things when it comes to economic data, news, whatever, right? And being able to connect those dots throughout your assessment of the looking at the marketplace, which is very important. It's very important, right? Because I'm a big stickler of news, right? You guys know me, right? I'm a stickler of data. I love good intel, right? Good intel obviously leads to what? Some kind of form of what? Good opportunities in terms of your probability of success. And that's important, right? That's very important. All right. So it goes on to the second bullet point, right? Now we're going to get down to what they call the nitty gritty, right? Big tech earnings, right? Everybody waiting for big tech earnings, right? Big tech earnings, right? Everybody waiting. This is the calendar week where it is going to be rocking with, if I'll say this here, if Snapchat in itself is any indication of what the market may have to deal with, given the fact that, how they literally bombed, right? I'm pretty sure people are going to be like, about that, right? Because a lot of those companies are some of that within that same space of, tech, social media, whatever, who's going to be affected by the value of the ad revenue being now kind of turned on side of his head, because companies don't have that extra surplus of CapEx spending or R&D spending to spend on ad revenue value, to attract business, because dollars are tight. They starting to lay people off, yada, yada, yada. Y'all get it, right? It's not hard, right? So really quick, looking at Snapchat's, chart a little bit in terms of what they endured last week, right? Your brother definitely shorted that in the earnings, right? Shout out, kudos to anybody that caught that, right? Bought those puts, right? Because I definitely bought me some going into Snapchat's earnings. And boy, did them things pay well. I think I clocked in over 800% on those puts, right? Bought a nice little 5-piece chicken dinner of them too, right? So you can pretty much draw that that value in your head there. But just looking at the chart here with Snapchat again, you would think to yourself like, man, again, this is a major company here, right? Let's go to the daily here. Well, it's not going to show because I need to go back to the or crank it up, but nonetheless, you can kind of see what's going on here. Just utilizing it from a place of saying, this thing was just kind of trending, going nowhere. Basically, coming out of the end of last month into this month, it was just kind of caught this perpetual consolidation accumulation here, right? Just kind of trending, at or below $14, right? As somewhat trying to build momentum, in this case, positive momentum, hoping that Snapchat will necessarily kind of lead to any kind of overly bad news that they hadn't already forecasted for, right? Because we know earlier in the month of June, somewhere around there, Snapchat CEO Evan Spiegel came out and pretty much denoted that, of course, they were going to have a level of softness. They were, possibly going to think about laying people off, like as we begin to hear from a lot of other companies, and so be it, right? Numbers come out, definitely, showed that there was a lot of contraction, a lot of, what everybody was thinking that, they just didn't have enough muster even to push through even the lower guidance that was given to them coming into this quarter. And because of that, the stock sold off. And me saying that, I guess I'm trying to say that even though markets will say, you know what, even though bad news can be good news, they didn't take that approach with Snapchat, right? They did not give Snapchat the benefit of the doubt. And because of that, the stock plummeted literally over 40%, right? You're talking about from $16 all the way down, right? All the way down here to, as you see, he now is resting at $9.88. Like, couldn't make this stuff up, right? Could not make this stuff up. A massive dump there, right? Given the fact that, they thought that, Snapchat will at least be able to kind of turn the curve because, they wouldn't necessarily come as bad as what they thought, right? But that didn't turn out to be the case. And so not only did it sell off, but guess what? It's neighboring what? Bigger, I guess if you will, is bigger competitor, and Facebook, they saw the same kind of level of energy, right? So I actually, I swung puts on Facebook too. I only swung one, but it was just enough where I felt like I was worth putting that level of risk out there for both. And lo and behold, both of them paid out, right? Those were swing puts that I bought actually into this week, right? That I bought last week ahead of Snapchat earnings. So that way we know if Snapchat sells off, guess who else is going to sell off? Facebook, right? Facebook was definitely going to reach some of that, some of that stink juice as well, right? And lo and behold, they definitely did, right? Just looking at the chart here. I mean, it was just horrible, right? But look what, Facebook, spent the most of its time, rallying off this low here around about, 150, 157, 155, whatever, and somewhat tried to insulate itself ahead of Snapchat's earnings. Now, I know it wasn't all predicated on Snapchat, but the idea that the tech sector was getting ready to kind of launch their earnings, this week here, like all things, investors are smart. They try to front run potential inevitable good news or inevitable bad news as a way of saying I'd rather fall if we miss earnings from around 180, 170 as opposed to falling from 150, 160. Does it make sense? So you rather fall 7% from 180 as opposed to falling from 7-8% from 150, 160, right? And you're trying to establish support at around some of those same areas. As you look with Facebook here, that's the area we're talking about here, right? This 160 down towards this 150 area, 155 area. That was that kind of massive point of demand zone or support point that the markets kept kind of feeding off of to say every time we get close to it, we rally off of it, right? Every time we get close to it, we rally off of it, all right? And lo and behold, this time, they was able to kind of get the market, farther away from that particular supply zone or demand zone, accumulation zone, and then inevitable happened. Snapchat misses on earnings, Facebook dumps because of that, and it kind of falls right back to a perch of resistance near we were when we were trying to break out of this 150 zone up in there 160, right? Or 170, right? So it's kind of like at the point now where it's like, okay, we kind of right back at the top part of our bigger channel of 170 down to 155, and out of the tighter channel between 160, right? 160 and 155, right? That's definitely your red, what they call the red zone. If you was a football person, that would be considered the red zone down here, 160, 155, right? At least from 155 to 170, that would just be considered, maybe, I don't know, maybe up towards the 50-yard, half line or something. I don't know. But y'all get it, right? Y'all get the point I'm making. So that's important to recognize that, guys, because again, if you are a trader who's looking at, potential, issues surrounding the marketplace, and you're trying to say, well, is there room for improvement, given all these different things that we're going to talk about for us, what's important coming up even this week that needs to be known by every investor or trader? How would that bowl up against this particular stock, right? This sector, right? The outcome of their business model, what's the ramifications of that? Even with the Fed raising interest rates, right? Cheap money is being priced out the market now because the Feds are tightening and raising rates. That doesn't do well for big growth stocks. Why? Because they've benefited off cheap money for so long, low interest rate borrowing against that, which also helped their stock prices as well, right? Now that gravy train is somewhat over, at least for now, that hurts them more so than it gives some kind of form of just saying, well, we've already benefited thus far off that, and we should be able to sustain ourselves because that's the whole purpose of putting good money to work. But apparently these companies just didn't learn, or they didn't have enough, I don't know, maybe foresight to maybe put that money to work in places where it would have really helped sustain their stock. Because from what I see, all these stocks are just selling off. They're plummeting, right? They've just been plummeting. Like Facebook is down from near over $400. It's down here near 150. Right? The beginning of the year, Facebook was trending up near $400 a share, and here it is now down there towards 150. Like, make that make sense. Like, this is a beloved stock that everybody's like, man, that's Facebook though, bro. That's Facebook though. You just got to buy that just on GP. Like, okay, where they do that at? Right? Where they do that at? Right? Smart people realize the value of knowing how to, rate opportunity, given the fact that if a market is, amped up on a lot of free money, stimulus, this, that, and the third. So we know that a lot of this is not what we call organic growth, but it's more so, artificial growth backed by low interest rates and a very accommodative Fed. You can't say that these stocks earned their fair share of their market value organically, right? heavy lifting, lead work, great brain power, good C-suite, executive decision. That was not the case. We had a pandemic, and the biggest money heist ever in American history, in the world history, came from that, while the Feds just overstimulated the country, printing all the future taxpayers' money and gave it to what? The richest people on the planet, the top 1%. Well, there may have been small pockets of other citizens who benefited too, but at the level that we understand how markets work, right? It's about lot size. It's about the more you have, the more you gain in terms of interest value, because that's more what? Irons on the fire, right? That's more dollars to attract more dollars, right? Y'all get this stuff, right? But we have to speak to it. Why? Because a lot of people who don't understand this, they will never be able to, make that level of what? Connection, right? And so that's why you need people to be able to unpack it for you. Make it make sense, brother, right? Make it make sense. As you see, like my little Cat Williams little thumb up at the top up there. You looking, that's that face where you like, make it make sense, bro. Because right now, if you're talking a lot of crazy, I don't understand what you're talking about, right? So that's our job, to make it make sense for people who don't follow it as much as we do, possibly. Right. So that's the whole ordeal when you think about this. Why? Because when we get into the weeds of Facebook, Apple, Microsoft, Google, right, Amazon, who's coming down the pipe with their earnings release, man, just imagine what this week is going to be. This is going to be fireworks upon fireworks upon fireworks. And it's a busy week, right? Now, even for myself, because, I got things going on. I've been busy for the last couple weeks. Some of you guys definitely probably already noticed that at this point. I kind of been absent. Like, brother Ben, what's going on? Right? Trust me, it's all noted, and it's all based upon a lot of things going on inside, my household that I got going on. Some of it was not planned. Some of it is planned. But nonetheless, when we kind of get that pace of getting caught up, then, it'll be back to business as usual in a way that, we need to be very proficient and efficient with the time available that we can offer. Right. But nonetheless, the markets have been great for a lot of us, because we've just been being true to our skill set. We've been true to the data. We've been true to, again, utilizing, good intel that helps shape our our interest value here. Right. So what's going on, Ilba Monica? We see in the building. Peace, power, property, Miss Lamb in the building. Right. We're going to get to the panel too and open the mic for you guys here shortly. I just want to get through a couple of these bullet points, then we're going to talk about them. Right. Because I think this is going to be really good for a lot of you guys. Some of you guys can probably, do, if you got that kind of mad money, as Jim Cramer would say, you guys going to probably make you a couple nice little bags this week, right? And I know it just to be one of those moments where like people are just kind of seething to get after this market this week. If nothing else, this would be somewhat like, going to your favorite theme park and just, waiting for that, that one ride that, everybody came there for. This would be that scenario here. Right, this week would be synonymous to that kind of level of what? Thrill, excitement, just the anticipation that got you all revved up and fired up, because one way or the other you're gonna leave, you're gonna get that level of what, excitement, and I think that's going to be very interesting, because it's going to really shape how people even measure and map their own their portfolios, right? If they know that if we're, not in this kind of dark winter, what's going on, Oba Caesar? See you in the building too. Peace, power, property, Oba Caesar. Happy to have him in the house, right? Happy to see him. Good to see him too. Right? Shout out to Oba Caesar in the building, the backside of YouTube there. So again, this is going to be stuff that's going to shape our narrative in a sense, right? Shape what we need to be paying attention to in terms of going into the back half of the year, right? This last, little 6 months of the year that everybody's waiting to see if the Fed's going to pivot and start, easing again as opposed to tightening. Right, that's what Wall Street is betting on. Right, they just calling the Fed's bluff, and who knows? They may be highly disappointed. Right, but we'll see. Right, we shall see. So the first thing it says what? The biggest companies in the world report earnings this week, and many of them are what? From what recently beaten down technology, the technology sector, which we know this stuff. But of the last week and a half, guess who's been rallying hard? Tech. Right, tech has been really carrying the market over the past week and a half. Right, this idea that all the bad news is priced in, no matter how hard we got hit with bad news, the market said, "Well, okay, yeah, we get it. Shrug it off, buy the tech sector. Shrug it off, buy tech sector." As if tech sectors, is going to save the world right now, and they laying people off. But again, that's the nuttiness of markets, right? Where markets can remain irrational longer than you can remain solvent. Right, markets can remain irrational longer than you can remain solvent. And when we hit those kind of moments in the market where, the psychology shifts to such a very bold, thesis where they're going to override, the economic data and just ride on pure dollars, right? We think money going to save the market from itself. That could be a recipe for potential disaster, Why? Because this is a different energy than it was 2020. It's a different energy than it was 2021. There's tightening happening. There's rate hikes happening. People act as if these things have, from a historical record that when they happened in the past have never, been no more than just a shock to the marketplace. So just to say that these things don't matter would be ludicrous for anybody, right? Anybody. If you don't believe it, just look at your stocks, right? Look at your dollar stocks that you like, Netflix and Apple, where they at from the all-time highs. That's to me, it would be as black and white as just looking at what them stocks was literally at the beginning of 2021, or I should even not even that, but the beginning of even 2022, somewhat to a degree, and then where we are like right now. How fast the markets have pulled back since then, right? And that's important. Why? Because that's a litmus to tell you exactly the nature that these companies ain't built like that. They talk a good game, but they ain't built like that. If not, they would have held most of their gains at least a little bit more better. They would have weathered those pullbacks a little bit better. But that showed you how weak, how finicky, and two-faced and two-sided that Wall Street really is. The banks, the hedge funds, right? The market makers, right? Very two-sided, right? Very two-faced. Must be two sides, right? Shout out to Shawty Low. All right, so this is it, right? So the fun starts this Tuesday, right? We got what? Microsoft up the bat first, right? So really quick, so we're going to go over the trading view. All right, look at these things on the big boy chart. All right, that way we can make sure we keep up. And now, we want to get some crowd participation now. Right, we're going to open this thing up for the fam so we can all talk about this, right? We're going to have our moment here. We're going to walk through this stuff best we can, at least some of these big tech companies, kind of get in, hit some nuts and bolts about this market, and we'll get on off here. Right, again, we're happy to have y'all here. Shout out to the family. Shout out to the money crash. Shout out to everybody who, find value and good information, right? People, when they put, charts and technicals and fundamentals to work, and we all kind of use our collective think tank and flush out all the bad news and all the good news and figure out where we stand with this stuff, right? That's what this is all about. All right, that's what this is all about. All right, so first up the bat here again. So we're gonna open the panel up to guys. So y'all can definitely jump in at any point. But Monica, Brandon, anybody want to come on, the link is in the back chat as well. Definitely come hang out with us so we can kind of slow walk this thing and kind of get through some of these big names here in terms of Microsoft, Google, Meta, Amazon, right? All the other ones that's off the block but on the block. All right, we're gonna talk about all of them, right? All right, so let me get that link here over to you guys, to some other people who may not have seen it quite yet. Just in case you do want to come on the panel, you'll have the ability to do so. So there's that link. It's already in YouTube, so you guys should definitely have it there. I think I posted it into all the other groups, Facebook, etc. Let me check Discord. I don't think I dropped it over on Discord. My bad for the Discord fam. You guys are definitely on the We Trade HQ block, so we got to make sure you guys are taken care of. All right, first and foremost, there, make sure you guys are solid too. There's the link there, just in case you guys are want to pop on as well. You definitely welcome to, right? You definitely welcome to, right? By all intents and purposes. So there's the link for all about all the patrons who may want to come in and hang out with us and build on this topic, right? So make sure I go share it on Twitter as well, right? Why not? Give some of the Twitter, Twitter opportunities to the flow as well, just in case anybody over there is maybe passing by and want to stop through. All right, there we go. All right, that's that. All right, so getting back to the charts real quick. So again, we got Microsoft up first, right? We have Microsoft up first. All right, so what I want to do real quick, again, I love that crowd participation value of that. I love the workshop minded energy of doing these lives and getting everybody's perspectives and their views and how they value the market, how they see the market, which is great because again, you need that kind of all eyes and ears on deck. So Sister Monica, I think you might be in a bad area. I see your signal coming in and out. So but I don't know. Oprah Brandon, you there by any chance as well? I know you guys busy on this Sunday.
Yes, sir. How you doing today?
Man, doing well, family. How you doing today, man? How's the shy? How's everything up your way, man?
Man, it's still hot up here.
It's hot everywhere, bro. This heat, but they talking about Europe got record heat. They ain't never seen it.
Like they barely get air conditioners.
Right, it's hitting everybody. The whole Midwest is frying right now. Of course, the northern quarter up there where you guys are. The South is baking, right? Because it's typical down in the South, but. Yeah, it is definitely, some weird stuff going on. I didn't call it weird. That's Mother Nature, man. Who wants to call it weird? But whether it's cause or not, but it is definitely frying right now. You ain't lying. Yeah,
Oh,
man.
yeah,
So,
definitely.
I mean, I tell you what, this is hot right now too, man. These markets, bro.
Man, it's going crazy. Like people don't know whether to buy, sell, or keep it, or try to price in the bottom for certain stocks. I mean, honestly, if you're a short term trader, this is your market. You should you should
Yeah,
you should you
volatility.
should definitely make a good bag up out of this. If you're a long term trader, get up out of there. I'm somewhat out of there right now. I don't want to say I'm trying to price the bottom because I don't know where the bottom is, but I'm waiting for that pivot at the bottom. And I know that's gonna be like next year sometime. I know it's not gonna be anytime soon. So, I'm just getting my ducks all in a row for me getting ready to buy some of these stocks up. But I definitely am, playing some short option plays, get that bag a little bit bigger.
Yeah, volatility, right? That's the name of the game, especially for day traders, because that's how day traders make their money, right? They need movement, they need expansion, right? They need that level of divergence away from the mean, right? That standard mean value when you look at certain stocks, especially if they're in somewhat like we spoke about, like a Facebook, if it's consolidating, accumulating, at some point, where do we break out of that channel, right? Are we rocketing, or are we kind of pulling back off of it because the weakness was there? We can't cross over major moving averages. The RSI, the MACD showing weakness. A lot of things can be kind of in the mix. And so it's just it's up to us to be able to read those things best we can, right? As best we can, in terms of being able to determine direction of bias, right? And that, of course, that goes into marrying fundamentals and technicals. We get it, but we want to always speak to that, right? In that regard. Right. So as you saw, even with the news as far as earnings just for this week, this Tuesday, you got Microsoft, and Google off the bat, coming Tuesday, right after the bail, right? And again, both of those stocks are somewhat, they somewhat of a backstop to the ideal of what we saw with Snapchat to a degree, and that being more so Google because they're dealing heavy in ad generated revenue. Of course, the whole idea with YouTube and how they do a lot of their business besides the service side of things as well, on the internet side. But that YouTube portion had really kicked into overdrive during the pandemic, right? Everybody was on YouTube. I mean, everybody was making money on YouTube because that's where everybody, they was shut down. Now think about it where we are today. And now people getting back out in society, this, that, and the third, even though YouTube is still a big juggernaut, but we saw after the last earnings that they were saying that the YouTube revenue was starting to kind of slack up or dry up a little bit, right?
Mm-hmm.
So that's the sign, that's the telltale signal. Why? Because if the majority of the tech companies that deal in social media, corresponding with that of the general public, if a lot of that money that they've been, hauling in, that's giving them that leg up in terms of the earnings or ad rev, if that's starting to be decreased because sponsors not want to advertise through their sites and this, that, and the third, imagine what that's going to look like, right? In terms of, how much money they pulling in now as opposed to then. It makes sense because the business model itself hasn't changed. They ain't really did any kind of, over the top, acquisitions to really say that we've pivoted into a whole different way of making money. It's just about, okay, we hit our heyday. Now we're kind of going back to some kind of form of normalcy, if you will, if you want to call it that. And how would you rate our company at this multiple as opposed to this PE, well into, the 2/3 expansion from where they was at a normal rate, if that makes sense. You see what I'm saying? Mm-hmm. They got that little extra icing, right? You got that big piece of chicken. You got to eat the backstrap and the gizzles, right? Now you get to get the chicken breast.
right. No gristle for you.
Right? You know what I'm saying? So that's how you want to look at these earnings coming forward in terms of where is the mean, right? Where's that, that deviation, that standard deviation, where typically if we had a pandemic and we looked at them from a forward, growth perspective, where would they be today as opposed to that anomaly that we had with the pandemic? Does that make sense, guys? Because I think that's what's going to help a lot of traders, come back to some form of reality and price these stocks in a way that they need to be priced, at least rightfully so. All right? Because the worst thing you can do is get ahead of yourself and waste good money on a bad trade in a way where it's pulling back, even in a bad investment. Why? Because it's easy to say at some point these companies are going to rebound, and a clock is right twice a day, but you're going to be twice as wrong trying to buy at high prices when there's inevitable more pullback possibly coming, where you could have saved that money and bought it twice as cheaper. Does it make sense? Or a quarter cheaper or a tenth cheaper or whatever. Nonetheless, you want to buy low, sell high, right? Not buy how to prove that you can just weather it, just to prove that overall 5 years from now, it'll be back up here. But look, now you got to wait longer than the average person that bought lower, right? They start reaping gains literally, the next few months when the market hit that hard pivot. That matters, all right? So we want to speak to that. So again, just using the chart here, just kind of using the daily, starting out with Microsoft. We know when Microsoft made this kind of breakout moment. Again, going back to the value of the COVID lows here, just that COVID lows here, right? And we just kind of put that as the the baseline axis, right? We're kind of peered to the top, and now on the backside here, we're kind of seeing how this thing has been trading since. It's just been on fire, right? It's just been on fire. I mean, you got a 132 handle all the way up to 340, right? I mean, just make that make sense. Like what? I mean, did Microsoft find the elixir for what? How to really fight what viruses on their computer, right? What happened, right? Because we know that's not the case, right? What gave them such opportunity just to leg up like that? But we know what did, right? Stimulus, right? Cheap money, right? Accommodated Fed. And now it's kind of like pulling back from the mountaintop, right? So look at this. Like this is the mountain. They went to the mountaintop. They went to the Kilimanjaro, right? They went to Mount Everest, right? They went to the Ganges, the Andes, or whatever. And now it's like, okay, yeah, now we kind of on the backside of the mountain. We kind of sliding down, right? Even when you look at the linear regression band here, this little, blue and orange band, it's still pointing to the downside. Thus far, it's been respecting it, right? The last time we breached above it, went back as far as April of this year. We got above it a little bit. We peaked that one out. That was our fool's gold breakout when people thought the market was going back to all-time highs, and it fooled a lot of people. It didn't fool us, but it fooled a lot of people. And ever since then, we just been downtrending, right? Look at this. Just look at the chart from this perspective before even we zoom in. Microsoft is still showing weakness. It's printing lower highs. How do we determine the downtrend? Right? That's the proverbial question you have to ask yourself every day. If you look at the macro market value of the market of these different stocks, how you determine if they're in an uptrend or downtrend, or at a point of neutrality. That matters too. As of now, we're still in a proverbial downtrend. And even though Microsoft looked like it's trying to print somewhat of a inverse head and shoulders here going into their earnings report here, I could honestly say it's trying to present that picture, right? And let's make it make sense here. Let me draw it here on the chart, as you can see it here, so you guys can see what I'm talking about here. That is an inverse head and shoulders here that Microsoft is thus far trying to print going into its earnings, right? And it's slightly above its 20-day moving average here, as you can see right there, right? So that's somewhat bullish on a daily at least. RSI ain't too bad, right? It's kind of perching at around about 40, 50 on the RSI, so it's sitting right in the middle. You have somewhat, still slightly, green impressions on the squeeze momentum or MACD if you had that up, right? And the rest of it just lies in the value of the numbers, right? What those numbers may kind of entail in terms of, is there softening because of the rate hikes? Is there softening because of the lack of business? Is there softening because, a lot of other ancillary issues that's now surrounding the market where they can't really just get their footing right properly because they just don't know what the future holds. So because of that, their R&D team or the team that's trying to make decisions in the future, they can't. Why? Because they just don't know what the rest of the back of the year just going to look like. They can't price it in. They don't know when Russia, Ukraine's going to come to an end. They don't know when all this other stuff going to kind of unclog itself for supply chains. I mean, it's just a myriad of problems, right? Throw some on the board and pick your poison. Right. So it's important to think about those things. If you're a trader, it's just more about, okay, well, from a technical perspective, I kind of got to understand of the macro fundamentals. From a technical side, where's the price action leading next, right? Where's the greatest probability of the price action is going to be going from there, right? Leading from there. Now we know base case, or it's a best case from Microsoft, if they was able to kind of, come in better than expected in terms of the earnings report, and try to play into the ideal of what this will look like if we had to say, well, okay, if we're going to use this kind of diagram of, the inverse head and shoulder value, and we'll say, okay, well, we'll put that neckline, somewhere around, let's say hypothetically, right? We'll place it. Let's say we placed it like right here, just on GP. If we place that neckline around about right here, right, that'll give us an understanding about, where is that kind of equilibrium line, right? Where's that middle place, right? That opportunity zone, if you will. From there, we do what? We try to map the length, right, of what that breakout, possibly could be. what would that look like, right? What would that look like given if we were able to get that proverbial breakout, right? On what a technical inverse head and shoulder will give you, granted, if you got follow through from bullish drift, that puts Microsoft somewhere right around about 285, right? Or at least add up against that 200-day moving average, right? In this case, it's showing, hitting that around about 280. So you got a buffer there between 280 and 285 of potential upside for Microsoft, given if they can come in better than expected on their earnings. Now, will it go that high? That's not a financial advice. I'm not saying that it will, but we're just using that from a calendar saying where are the major points of opportunity based upon moving averages, acting like a magnet and trying to draw this asset towards it if you have enough bullish energy behind it, pushing it up against towards those major marquee points, if that makes sense. And that's how people will kind of set their ideology and trying to play into that. Now, secondary to that would be clearly the most recent point of high, right? The most recent pivot point. And that kind of puts it at around, if you will, we'll just say this guy right here, right at the top of that little red candle right there, that puts us at around, let's see, give or take, 275, right? Which is seen to be very obtainable for a Microsoft type of push going to the earnings. If they can gain, about, maybe 3%, 4% on their earnings, somewhere around there, that kind of catapult them up towards that little area, right? When you think about, the price of this stock at this point being around about 260, right? So around about 5%, somewhere around there, give or take, right? And so that could also be a scenario where you can say, well, if we are, looking at the market for as probability, what would the options market present in terms of that, right? What would the options market say, what's likely if you look at the probability bell curve of those points hitting on the chart, right? So really quick, I'm gonna go over here to next week's expiration on bar chart. We're gonna take a little look at that really quick, and we're gonna get through a couple of these little, these little moments here, right? Thank y'all for again being patient and bearing with us here. Thank y'all for your participation. Like, share, subscribe. Get this in front of your friends, your peers, everybody. Have a like and to want to know how to, be in this game. This is the moment they need to be paying attention, right? Don't know if any sports on the day or not, but nonetheless, this is my sports right now. This is my Sunday sports right now. I guarantee you. All right. So looking at next week's expirations for Microsoft here, going into the earnings report, first thing we want to look at is that put to call ratio. Right off the back, you see as of today, meaning Friday, going into Monday, right? You have, a basic put to call ratio around about 0.84. So almost near neck to neck, right? In terms of put call ratio that were bought Friday going into Monday. So these are contracts that have already settled. This money is already collected, essentially, right? Going into Monday before they have earnings Tuesday. And the same will be said looking at the open interest, right? The rolled, positions, right? The swung positions that came from even from Thursday, right? Into Friday, collected going into now Monday. 40,000 on the put, 41,000 would share on the puts, and then 56,000 of that of the call. So almost again net to net. So very even, somewhat even, based upon how people feel about Microsoft going to the earnings, right? And so on the put side, just kind of starting from the bottom, going to the top, you see more, weight presenting itself at around that 250 strike price. Go figure. Why? Because it's an even number, right? And if you look at the chart of Microsoft per se, in terms of let me see, come over here real quick. In terms of a point where the market's kind of showing some kind of form of support, it's showing at around the top of those shoulders of the head and shoulders pattern, right? It's showing, that level of, potential value of pullback at around the top of those shoulders of the head and shoulders pattern of the inverse head and shoulders of that of Microsoft. So let's look at that really quick here again. Jump back over there. All right. We're going to jump around a little bit. Matter of fact, let's do entire screens. That'd be easy to flip back and forth. All right. That'll be a lot easier to flip back and forth. All right. So over here again, Microsoft here, you have it here, right? At around the top of those shoulders, as you see around about 250 right there. Shoulder area here. Shoulder area at around here at 250. There lies why you would have that 250 strike put. And as of Friday, that put price premium was priced at around about on the low side, around about $210. and it gained 32% on the day, taking it now up to around about 280, 277. Go figure, right? Because we know the market was on the week Friday. So those people who had swung those puts from Thursday into Friday made money. They made bank, 32% value on those puts. All right, so shout out to those guys, right? If they swung those or held those or rolled those, they going into next week, up, for now, at least for now, right? Gotta say for now. But they still got, opportunity based upon, if they get more market weakness, starting Monday, maybe even into Tuesday, if the markets don't catch a bid, then they can possibly even have a decision to make whether they want to sell those puts in advance or hold them going into the actual earnings print themselves, right? As they say, a bird in hand beat one in the bush. Collect that bag. Don't put it to chance if you just really don't feel comfortable about taking that trade into a binary event like an earnings report, right? But as of now, again, that's what a lot of the weight is sitting there around that 250 strike price. So going into Friday on Monday, they will be priced at around about near $300 a contract, give or take. Right. So that would be something that you'll definitely want to watch in that regard. And so going a little higher here, going into the call side, like we said, that area of interest I'm telling you guys about around that 275, 270 area. Let's see if that area is respected. Right. Let's see if that area is respected like we charted. And there you go. Right. There you go. Lo and behold, the 270, as we talked about, right? Or the 275, look at the weight there. 7,000 in the open interest, 7,000 contracts were bought Friday into the close. Right? As they say, numbers don't lie, right? Numbers do not lie. 7,000 contracts were bought into the close of Friday, with 7,000 open interest rolled into potentially from Thursday into Friday going into Monday. A lot of weight sitting at that 270 strike. Those are people definitely playing for earnings, because this is next week's expirations, right? But look what they lost last week. Them jokers lost a whole $1.84 last week, right? If they bought them, let's say Thursday into Friday, they definitely took a big hit, 42%. If they bought them, near at least the end of the bell Friday going into Monday, then of course, they kind of started over from ground zero from the pullback. And that's a great place you would want to trade that, right? That's being strategic, right? I do that a lot. I'll wait to the last 5-10 minutes before the bell rings, after the market kind of made this declaration of energy, how they're going to trade that market that day. And then I buy my position there, going to the fact that I know I have better risk management into a 3-day weekend or to a close, and then we'll deal it from there. All right. What's going on over, Chris? See you in part in the building. Shout out to you as well on this Sunday. Stock Talk Sunday, as we call it. Peace, power, and profit to you as well. Right. Just kind of going over some of the earning plays. Definitely want to get you guys' opinion, because I know y'all been watching this market too, and y'all ready, right? You're ready to get at it, right? This week, especially this week. All right. And so as you see, that 275 strike is the same reality. Look at that. 4,000 on the open interest, 2,000 turns of that value is that are intraday value. But lo and behold, when we did our inverse head and shoulder, we got a between 280 to 285 in terms of the liftoff. That's why you see weight at around that 280 area as well, kind of sitting somewhere in the middle. 6,000 on the open interest there, 4,000 on the paid value for contracts bought that Friday into today, or Monday, if you will. I'm saying today, but into today. Look what those contracts worth right now, about 70 cents a piece, right? Kind of far, out the money. Of course, you're playing definitely out the money, right? You're doing a game of probability, right? And being able to determine what that open interest will provide for the stock, in terms of next week, which we know it's going to change definitely by Monday and Tuesday. But that'll be interesting, kind of, being able to read that IV, right, and implied volatility, and figure out exactly what kind of move we will get from price perspective or price point in terms of how we should measure the value of options that potentially may be worth trading, right? If you don't have any kind of complex strategy beyond just buying premium outright, but if you're selling, premium, meaning, covered calls, regular put spreads, debit put spreads, whatever, then that's a whole different ballgame, right? But again, you kind of get it, right? You guys get it from that perspective, right? Iron condors, butterflies, y'all know the role, right? So that's important to think about it from that perspective, right? Or that complexity. So right now, again, those are areas of interest that you want to pay attention to. Why? Because we see that, right? That puts you right at the 200-day moving average, right? Which is very, obvious equilibrium place, right? 280, 279, 39, but we'll say 280 for even numbers. That's why you got a lot of put with interest there. And then the best case scenario would definitely be up around that 285, right? That would be like just, extreme best case, right? You get a good lift, right? And that would you basically need the market Monday in terms of Microsoft to kind of drift back away from this 260 and at least get above at least 265, right? That makes that strikeout area just that much more what, probable than it is you playing from under the 20 moving average down here in the point of weakness, headed back down towards that shoulder there. You don't want that. You need some, at least Monday or Tuesday, you need Microsoft to at least get above 265. That's just my opinion, right? That's just my opinion, right? You got to clear some of those short-term hurdles of resistance at around 255, 265, 266. And best case, if you can get above 268, you definitely rolling in potential value there, right? But those are just probability moments. Again, this is not financial advice. It's just saying this is what edutainment. This is education based upon being able to read technicals and fundamentals. Right. So yeah, right off the bat, you guys got an opinion on that? Microsoft over Brandon, over Chris, in terms of what y'all may be seeing in terms of that as well.
Go ahead, Chris.
No, you can go ahead. Shoot. Yeah, it looked like close to a double top, but you never know. You gotta, yeah. I mean, you can play that anyway, man. It's just so frothy right now. Snap. Where we had Netflix, Tesla, and Netflix before that.
Mm-hmm.
And Snap was, something totally different. I just think, if from Microsoft may be different too. I think, that deal with Netflix, that may help them because it surely helped Netflix for whatever reason. I didn't agree with it, of course. Y'all seen the L I took on that.
Right. Or I would say at least the idea of it being a future scenario, right? Because they can say it helped lift the stock, but I bet to disagree. I believe the only reason why Netflix went up is because y'all know how this stuff works. Sometimes you get beat down so much, bad news become good news if you come in better than expected.
Right.
They played that support play as a way to say, okay, granted, we're here. Like really quick, let's look at Netflix. I'm gonna show you exactly what I'm talking about. I did this with a lot of people, under the training therapy scenario. I was like, hey, this is your case study, right? This is your homework. Go and look at the stock, in case of Netflix, and put together some kind of form of a thesis. Given the technicals, given the potential value of what they kind of already tried to front run in terms of letting investors know that we may have potential of losing 2 million net subscribers, right? So that means if they set the bar very high in terms of loss quality, if they come in anywhere under that, that's bullish, right? Because they're saying if we price in them losing 2 million net subscribers, they can count literally how much money that will be on the book. Does that make sense? Right? They can factor in what kind of level of monetary loss that is, because what is Netflix? It's a SaaS company, subscription as a service. They make the money on what? Subscribers, right? If that number is underpriced, then that's bullish, given the fact that the technical showed it had the same resonance, right? What was that resonance? Look at the chart. See those little shoulders I did right there? I did that pre-earnings, right? Right, that's that same reality. Now, even though we have more here and more spillage here, but I still use it from saying, if you new and you're trying to figure out what would that look like on a symmetrical layer, it will look like at around there, even though it spilled more here. This is just more of a
double bottom.
Right. Or in this case, if you have it from this perspective, you still got a point of incline of support there, right? You got that level of inclination there, right? Where you have a level of higher lows building, off a point of major support. Or you can say, well, I'll just play the value of his inverse head and shoulder, given the fact that, we kind of hit some areas of, notable resistance and trying to establish that. And because of that, that's that lift, right? That lift. So we did that same kind of mapping. We did this line here down to the top of the head. We took that and measured it to the top of the move that Netflix particularly would give you, going to earnings. And lo and behold, look what it did, right? It got up above that 218. We had to map around about 218. 218 to 220 was that point of that point of opportunity, right? So if you took either side of that trade, knowing that this was this trade here was very enigmatic, right? You had to hedge it. And I'm only saying that because it was just too much riding on it, right? Given the fact that this last two drops, they were looking for a proverbial bottom. They were looking for a proverbial bottom. And they found some kind of form of reprieve, at least for now, off this midpoint of trying to establish and turn the bottom here, and they use it as a launching pad, right? And that's all it was. That's all it was. So it was a great potential head. So this will be one of those cases where y'all heard me say this a million times. When it's that cloudy and the news ain't so much, very direct and kind of obvious, you do a what? 1 up or 2 down, right? Or at least a 1 for 1, right? That way, at least you got both sides covered. Just in case Wall Street try to pull some nut in this, you go like, no, I ain't trust them this time. They hungry, they greedy. Because look, the whole entire week lead up until next week's earnings, or that few days in the previous, week, they kept buying that trash, right? Mm-hmm. They kept buying tech. Think about it. They were trying to turn the market by flooding back into tech, knowing that tech earnings were getting ready to come up. Regardless of the banks, they just tried to say, well, I'll find, refuge and hanging out some of these tech stocks. And their lies, if Netflix in the midst, so be it. We'll buy that, even to buy that trash, right? And that's exactly what they did. That's exactly what they did. Because look here, look at the couple of days before earnings. See this counter right here? This counter right here was everything. That was a turning point. The 15.
Uh-huh.
Look at that counter, man. Look at that counter. Like, God, dog, bro, like what were them joker thinking? That's a low of 174.5 up to all the way to what? 189, basically 190. Right? That's almost near 15 points in a day. Right? That's when people like, joke back in the old school, they be like, somebody knows something. Somebody knows something, bro. Somebody knows something. Right? You see what I'm saying? So you would have to kind of keep that into your factorization, at least to a degree where you can say, well, maybe, just maybe. Right? And you don't want to overshoot or understate the probability that Wall Street is still what? Scary, they desperate, and they would do anything to what? Turn a dollar if they can. Right? They'd rather be wrong, than right in a way where if they put on that level of risk, given the nature of where the market were, how they were trending going into that earnings print, they would take that level of risk, right? If that makes sense, right? They were willing to put on that level of risk to see exactly if they were able to kind of get the lift they needed in terms of, playing off to support the technicals and also playing into those subscriber numbers being not so bad, right? So it was just one of those trades where, it was more of I'd rather hedge this one as opposed to, let's say, like a Snapchat, right? You would kind of take a more biased confirmation on Snap as opposed to something like a Netflix, given the fact that this calendar right here shook up a lot of investors before they had earnings, like 2 days after that, right? And that's how I was looking at it, like, okay, they was able to do get it off the lows, right? They killed this moment here from being the kind of pivot back to the downside in the earnings, and they turned it and sent it, and literally sent it above its 20-day moving average. Y'all know those moving averages are very important for certain stocks that are beaten down going into earnings print. They've managed to close it above it, right? They've managed to close it above it going into the earnings print, and then the rest was just them, whatever, right? They just, at the Netflix was back and they ain't, right? But they launched it enough off the level of support that they built, and it still fell well short of the gap fill, right? The gap fill is still way up here around about 245 to 250, right? They came up major short, and guess what? Those little guys right here, that's their problem right there now. Now they got to deal with them twins, right? Them the twins, that's the twins right there, right? That'd be like big meat still, right? Right? They got to deal with the twins right there. Say again, over.
No, I said that's not gonna happen.
Right. You know what I'm saying? So you think about that gap fill. Right, yeah. Think about it. Let me back it up so y'all can really see. I mean, y'all know what that look like. Oof, oof.
Yeah.
Boy, look at that there. What you talking about coming up short? When you try to shoot the shot, and it's just the second date, and she was like, what? Did you try to wait a minute?
There can be no tumbo.
Loan denied.
Right. Loan denied.
Sent the joker home, he highly, misread that kind of scenario, right? So, but this is how we have to look at this, because the market is saying, how do we at least provide some kind of form of, let's fake it till we make it, right? That's what we're dealing with now, right? They're trying to show strength, knowing that there's really no true organic strength there to be really said or spoken for. It's the ideal of, it's beat down enough, right? All the excuses that you're getting now are just based upon a whole lot of they just spoil, right? Wall Street is spoiled because it was so good before. They got to say, well, it could be worse because this, dude, they still pumping out bad data. How are you trying to convince people that this is the kind of buyer's market? And the Feds just started tightening. Think about that. They just started tightening in June. They supposed to start it in March, but they lied. It really officially kicked out in June, and the balance sheet was at that point around about 8.8, 8.9 trillion. Turned out they started adding more money back on the balance sheet when they were supposed to be tightening. We called them. Remember that time we called them? Like they still printing money.
Yeah.
Like, dude, what y'all doing? Y'all just lying. They got no credibility, right? And then the Democrats just constantly still trying to come up with these over the top packages to send money to Ukraine. Where that money was coming from? It wasn't gonna come from nobody else besides what? The Feds. 270 billion here, 55 billion here, 270 million here. Like dude, we dealing with record inflation. Y'all giving all our tax dollars overseas to a nation that has nothing to do with our house. Couldn't make this stuff up.
Mm-hmm.
Right? But this is the game they play. We know what it is, right? That's why we in this industry in a way where we'll never be food again, right? They will never be able to blow smoke up us again, right? It's important. And so again, a lot of this is just self-inflicted wounds. A lot of these top tech companies pulled out of Russia, boomerang daggered themselves, right? It's supposed to be about business and not personal. They made it personal, and because of that, they ate They ate bullets, right? Their own fault, right? Their own fault, right? Because you should never mix business and pleasure. This perspective, if you're a publicly traded company, because the public didn't sign off on that. You as an executive made that decision over shareholders own money. Y'all see what I'm saying? Like, you don't get to make that decision. You're not the president, right? And the president don't even get to make that decision. But we know America is full-blown oligarchy right now. Draconian, VAT stuff, all that's the draconian. Man, look, we know we'll be here for days. All right, more before they come after us. They're gonna come. But y'all get it, right? So that's what it was all about. And as of now, you see what Netflix did. It went right to the top of that linear regression band. As I was like, yeah, if we, the peak value would be around about 225. We had it mapped around about 218, 220 in terms of, potential inverse head and shoulder or the bullish, incline drill. It went right up there and hit resistance. And now you kind of right below that linear regression band here. Now, the only way this breaks above that, you're going to need at least a couple of days, 3 days of consolidation at or around it or slightly above it. And then you can launch, potentially go try to attempt to test. I say attempt to test taking out the twins here. Then you got try to handle this candle right here, right? At least back up towards that 240 area, back toward maybe 244. But that's a whole lot of if, right? It's a whole lot of if. You need Microsoft to beat, Google to beat, Amazon to beat, Apple to beat. You need a lot of things to happen. Right? You need Russia to say, you know what, I'm gonna give y'all a day off, y'all Ukraine, right? You need a lot of things to happen for that to happen. And you need the Fed to come in and say, I'd rather do a 50 basis point hike as opposed to a 75. It's that kind of party. And we already know the probability is that happening is very slim. Right? So that's just how you get to look at it, right? But that's the nature of the markets right now. They're desperate. Right? Very desperate.
Yep.
All right. So that's what we're gonna look at again, just kind of giving that. But I mean, that's
good
that.
point,
Go ahead. No, go ahead.
Yeah, good point. Good point. So,
yeah,
I can see Apple, Microsoft, all rallying this week for some reason. And
potential, right? And we're gonna get to them, right? And we'll hit a couple of them before we get off here. And just using Microsoft again, it's the same kind of level that we talked about far with Netflix. Now it ain't a shoe in. It's just that it's trying to manipulate the market to accept that. You see what I'm saying?
Yeah,
turning the curve and buying it artificially as a way to front run it. Because y'all know what markets do. They try to price in what? They price in the wall of word, right? They like to price in fear. That's what they do. Right. And a lot of it is artificial. It clearly is artificial. Right? We know it's artificial. Whether you do it from the inverse head and shoulders or the incline value there, Microsoft in trouble. They laying people off. Like, dude, make that make sense.
Make it make sense.
It's softness, right? And we know markets are forward thinking, but they also backwardated in terms of the data, right? We going from things that happened 3 months in the past, not in the future, right? And everything from that point on was at peak inflation, or they thought it was at least, and slowness and softness and rate hikes and everything else.
It's like that don't even matter.
You would think, right? But it's a lot of fake value that we know that comes along with these hedge funds getting ahead of certain values when they're putting everything on the table saying, where's the RSI, where's this, where is that? They put everything in play and trying to say it ain't as bad over here as it is over there. It makes sense,
right?
And it's like because they know most traders are gonna follow the big money, right? That's basically what's happening. They just trying to will their way as opposed to it being organic, right? And that's what you're getting right now thus far with Microsoft. Because as of now, I think Microsoft, of course, they guiding in lower, right? That's the whole other little sneak tip, right? They lowered their guidance coming into the earnings, so it makes a very low bar to beat. And
that's a good point though. Over that, what you just said.
Yeah, that happens a lot. That's why I keep tracking it. I track it 2 weeks before earning, and then that last week in the earning, because sometimes you'll get that revision. They'll lower it again right before they release the numbers to say that, okay, well, because of that, analysts will say, okay, well, let's go ahead and give them a favorable rating because nothing has changed materially, at least from the C-suite where they came out, put out some kind of press about the company's potential value or something they done to make the company stand out. They came up with some kind of value of a good little growth spurt, whatever, right? Or acquisition, y'all know how this stuff go. If that don't happen, then they revisions value stay right where they were going into the print, and now you just have to deal with the value of the guidance that they gave previous quarter and the now current revisions, and this is whether they can beat those numbers or not, right? And so there's a lot that comes along with it. It seems like a lot, but it really isn't. Once you get caught up in the regimen of knowing what to look for, you won't be surprised, right? Going forward. Make sense?
That's crazy how they can guide a company can guide lower just so they can beat on their earnings.
Exactly. Tesla. That's what Tesla did. All right, let's keep it 100. Y'all know we like Tesla, but Elon's the biggest slickster on the planet, right? And we're gonna get to Elon too before we get out here because y'all know he just had a big event for weekend. we're gonna hit him across the head before we get out of here. Don't worry, we got it. Right? We definitely gonna hit him across the head. All right. But that's what they did. I mean, even if you look right here, quarterly, look at that. They got expected around about 14.6% quarterly revenue potential increase. And that's 5.1 in terms of the quarterly earning, right? EPS value, right? And that could be, but everything else is just showing, negative, but they ain't got no numbers out, obviously. It's just, it's you kind of get to understand that the chart is already still in the downtrend. That ain't hard to see. Sentiment is still somewhat in the toilet. As you see, short-term prices bearish. Intermediate short-term is obviously, because they're still trying to think about that September pause of rate hikes. There got to be some kind of form of optimism. But everything else is down. Long-term price down. Earnings estimates down. Right? These are estimates, of course. These ain't nothing you bank on, but then you got earnings expectations 63% above 50. Price sentiment 63% above 50. Right? So you're like, man, that's very conflicting. Of course, it's supposed to be that way. Why? Because Wall Street is trying to say, given this, there may just be a sliver or a chance that they can pull it off. Why? Because the revisions are a lot lower. You see what I'm saying? So really quick, if we were just to run over to, let's go here, right? Let's go to one of my other, where we at? Where did I have it up? I don't have it up. Let's go over here real quick. Let's go to Finviz. And let's do this real quick. All right, let's go here, right? And just look at this just for a hot second, right? We're doing it strictly for the, you kind of see what's going on already with fall stock in terms of technique. We already kind of looked at that, right? But real quick, let's come down here really quick to the bottom, right? We kind of already understand a lot of these things here. We got the PE still around about 27. It's someone says favorable for Microsoft because it's Microsoft, but then you can't play that game any longer. You can't use brand recognition as to say that this company is worth this on the strength of the bigger economic picture. I say that's still kind of a fugazi reading, but it's starting to bring some of these companies down, right? It's lessening their PE. But what I want to look at real quick is just showing you some of the updates or upgrades they've gotten just from analysts, at least up until the 19th. The last one came on the 19th from Citigroup. Look at there. I mean, even though it downgraded, it's a little bit from 364 to 333, they still have it above 300. June 29th, Redburn gave them a straight buy recommendation at 370 price strike. You had an upgrade on the 27th of April from 330 to 350 from Wolf, Wedbush, Dan Ives, them guys over there, super cycle guy, right? Slightly pullback, super cycle, right? Still outperform rating, right? These are outperform rating. Buy, outperform, and buy. Going back as far as April. With peak inflation not peaking and still showing and they still feeling bullish on these kind of companies. That's them trying to will their way into getting the market to say, buy it regardless. Because what else you gonna buy? Well, how about you buy nothing and let the market flush out all this bad data and then you get a lot cheaper? They refuse to allow that to be the case, right? They refuse to. They fighting the Fed essentially. Makes sense? So you got to be able to kind of bake that cake, guys. You got to get them ingredients simple and bake that cake upon everything that you can flush out for as variables, and then you make that executive decision. Make sense?
Yep.
That's how you grow and you build. At least, and nothing else, the best thing you got as a trader or speculative trader is the ability to what? Hedge. If nothing else, you have the ability to hedge, right? So at least you have some kind of form of what? Greater probability than a complete direction of what? Buy it. Make sense?
What's the 4 pillars?
That's it. What, why, where, and when. You gotta love that, guys. You gotta love it. It just helps you put stuff in context, and you dumb this market down best you can, and you operate from a place of saying, I'd rather, stay within the confines of the probability value of being safer than, just kind of thinking that the market is going to, it's telling you to buy, right? They're going to tell you just buy. Like, no, bro, no, y'all ain't gonna get me. I ain't finna be trying to pay for y'all bag dumpage. Right? Hence, the idea of the, today's thumb there, right? With the bag holder, Spider-Man, right? Bag holder. Right? So real quick, I want to key on something real quick, just to kind of see where we're at in terms of Microsoft. So I'm going to show you this real quick. Hold up. Let me find that one for Microsoft. Just one little thing, nothing crazy, but just kind of seeing. Well, yeah. All right. No. Big tech. That's the overall picture there. That's not the one I want.
Microsoft still wins with the second place offer.
No, I'm trying to look for the just some of the some of those direct earnings assessment, like when you look at like Zacks or something like that, Yahoo Finance, when they have like what's the particular guide value going to the earnings print, it'll have some kind of base case numbers, and that's not the end all be all, but it helps kind of add a little context. So let me show you what I'm talking about real quick. Let me find that one strictly on Microsoft. You see what I'm talking about here. And you can kind of juxtapose against other stuff, but then so right here, even with this one, see right here it says what's your earnings report, what's in the cards, like little things like that. And sometimes Forbes put some out, like Investopedia. I love Investopedia put one out there like that because they go real deep into the education, right?
Yeah.
Zacks is still a paid publishing, like a Seeking Alpha. So they gonna have some bias, but they still gotta roll with the latest data. But you still want to kind of see what some of the raw numbers look like, right? So right out the back, it says what Microsoft announced that it has lowered its fiscal fourth quarter guidance, right? Citing unfavorable foreign exchange rates. See, they're getting ahead of it already. See right there? That was on the second though. Now mind you, that was on the second. That's why they call it a little favorable bounce since that time frame up until where they are today. Right? They're trying to get ahead of it because we saw what happened with Tesla on the first foreign currency exchange rate. We saw what happened to Netflix, and then some of them other players too. Like case in point, Amazon, right? I think we'll say at least the second largest chip manufacturer on the planet is a company called Amazon, right? Which is a Dutch company, right? In Europe, right? We saw they had very bad foreign currency exchange rate unfavorability that hurt their profit, right? And I actually shorted that one in the earnings, right? Right. But just knowing those kind of things, you're like, okay, they're trying to get ahead of the news. So it expects reports between It expects to report between 51 billion and 52.74, right? Being a revenue for the quarter, right? The company has previously forecast quarter revenues to be between 524 to 532. So you see right there, they're trying to stay within that range, but definitely below that high end of 532. They're trying to come somewhere right in that middle, right? They're hoping they land somewhere in the middle, right? Hoping, but that's what they're doing, right? And if it's anywhere within that, Wall Street would say, see, it ain't as bad, right? But it still is up to forward guidance from there. So it says Microsoft also slightly cut its earnings forecast. That's what I was talking about, right? This right there. See this ongoing. Now this was just, of course, this goes back on the get out of there on the 21st, right? So last Thursday. So as of I don't know, you can check and see which ones were kind of updated or not, but it says as of that point, it's saying that they slightly cut its earning forecast for the quarter, saying it now expects report adjusted earnings per share in the range of 224 to 232. Previously, they had stated for 228 to 235. Again, trying to adjust themselves ahead of that print, right? They're trying to get ahead of it,
right?
And that's important because again, we're trying to value potential growth, stagnation, or just softness outright. All right, so it says, so that's now, everything is pegged in terms of revenue at 52.28 billion at a growth rate of around about 13.28. Now, when we looked at the earning whisper, it had it around about quarterly rev around about 14.6, somewhere close to that number, right? Give or take, right? So they're not too far off, at least from that perspective, right? in terms of rev, right? In terms of what we're looking at for is that. All right. So in terms of the EPS, kind of same way, right? Suggesting about a growth around about what 5.53%, saying we saw earning whip. So they're kind of somewhat close to where we are, right? And then I'll just show you what the trailing 4 quarter average beat value is somewhere surprising around about 8.63%. So it's kind of falling off a lot from where it was back when everybody just print money, right? They had them high rates around about 60, 70, up near 80, right? Like them, they gonna beat, right? They gonna beat. That ain't the case now. All right. So really quick here, when you get down to the weeds here, this is where I kind of get real, put on your nerd hats, right? You start reading through some of that, it's kind of like a small, forward, a forward story value of a book when you open to kind of get to understand what's going on with the book. This kind of giving you what that looks like before you go deep into the weeds and figure out what the money looks like, right? We know about the cloud they have in terms of Azure, right? The whole ideal of what that looks like in terms of how they make money off that, right? Service value of their cloud offering that they offer these big major corporations, and how many clients have been able to kind of still utilize. Maybe some of those who left, if they negotiated different rates, all that stuff matters based upon what that revenue looks like on average. As of now, it's saying that it's anticipating around about what 21 billion, right, in revenue from the cloud. This is almost half of the projected revenue right there.
Mm-hmm.
That's half of that projected revenue right there. So you already know that's a major revenue growth, engine for them. Right? And if there's any softness in that, they really in trouble. Why? Because America is more a service-oriented nation now. And it's going to be based upon those big conglomerates like a Microsoft or, Amazon, right? Or AWS, right? Google, right? All that stuff, right? You know what it is, Cisco, Oracle, whatever, right? But y'all know what it is. Right. So it says that's estimate intelligent cloud revenues is currently paid at around about 21, indicating around 21.6 growth from the figure, value from a year ago quarter. Right. So obviously there's some growth there because again, we talking about business, right? This is a cloud value where even when you had a reopening of companies going back into business, they might attract a few extra little clients within it because they're trying to get streamline their businesses. Most people are working from home. Think about that. If more people still work from home, you would need such a cloud business to be able to back up all that external cloud, administrative, how do you say it? Use case and people work from home, being able to telework in stuff, things of that nature, right? And giving them those portals and admin, credentials and signing in, remote and all that stuff, and just being able to access the proper service. It's just a lot that comes on with it, right? Don't get me deep in the weeds with it, but y'all get the point. That's just an extension of where that may have looked like in terms of them maybe picking up a few extra clients because businesses had to change their business model given COVID was still on the out there, kind of causing and wreaking havoc. Right. At least for having people want to just come into the office at least. They're like, bro, I don't want to come in yet. I don't want to come in yet. So kind of going from there is their monthly user base count has surpassed 270 million thus far in 2022. So it's obviously growing in that regard. And y'all know they got their new thing in terms of teams now, right? They got this team stuff like an online value like you have with Zoom. That's the biggest competition for Zoom right now is Microsoft Team. And who do y'all think they would trust more for security, Team or Zoom? They're going to go with the home team in Microsoft, right?
Yeah.
And that's just something you got to think about because now we already know that's the antithesis to Zoom is Microsoft Team. So if Zoom have any weakness in terms of their online business portal and connecting clients to end user, you know exactly why. Because if Team is still a user, because that's what the last 2 to 3 reports from Microsoft is that they're stealing customers from who? Zoom. That'll show if that's still happening when Zoom released their numbers, and or when Microsoft released theirs and said we grew more in terms of our Team Essentials network and network development scenario, right? So something to think about there as well, right? So just whatever, right? So it says a Team's expanding customer base and features are actually helping Microsoft win. It says win share in enterprise communication up against who? Zoom. Zoom like, man, I pay y'all, 10 racks. Take that out of there. Take that out of there. Get that out of there. Right? Somebody hit Control Alt Delete on that little sentence right there. Get that out of there, right? Get that out of there. Long denied, right? Microsoft paying us that dough. So it says at the end of the first quarter, fiscal 2023, Zoom had over 198,000 enterprise customers, up 24%, obviously. Moreover, 2,916 customers contributed more than 100,000, right, per the trailing 12 months revenue. I was around about 46%. Think about it, you got 2,000, basically 3,000 customers, and all of them was at least the bulk of that were paying at least $100,000 per value within their use case. That's a bag. Right? That's a lot of money, right? That's like somebody showing up your door, so like, look, Chris, I know you got DJ, but I'm looking at him. We know you're a constant, good distributor. You got good, tracking, good customer service. We're gonna pay you, 100,000 to facilitate the whole, beginning to end of this thing, and we just gonna keep you on steady payroll. So every time we come to you in the boat, we already know, gotta understand how much we're gonna spend, and we just gonna pay you a set block amount. It'll be that kind of scenario, right? Man, right. That's how these businesses really be making all this money. Like, how do people making all this money, bro? It's just when companies go to purchase order out their business need necessity, they just come up, they negotiate a price and they put on a contractual variance. Like, next time we come up for public negotiation, it'll be 6 months from now, right? Or maybe they say we may do it on a per annual basis. In essence, that's how renegotiate our price value, but up until then, you still got to run that rate, right? Regardless if your business is going up or going down, you still got to honor that rate, right? Unless you just do a hard termination, you have to pay that kind of divorce, right? Like what Twitter going through right now with Elon, right? Right? It's cheaper to keep her. Y'all remember that song? It's cheaper to keep her. Right? It's getting messy out there.
It's tough,
right? So this kind of reads, it says a solid uptick in teams and strong Azure demand is still investors' confidence in Microsoft. And just again, an aspect of where the lion's share of Microsoft money gonna come from what? That value of their cloud, right? And team may have a little aspect of that too, but definitely within a couple of those two parameters, that's gonna really tell the value of what their company gonna look like, at least from what? Revenue, right? That's just revenue, right? Now it says strong adoption of Dynamics 365 is expected to have driven top line growth as well. Right, to be reported, Microsoft expected revenue for growth Dynamics is supposed to be around about mid 20% range, right? And that's just showing you where they at in terms of how that has either fared thus far, or if it's inclining, or it's stagnant, or it's still it's starting to kind of trail off a little bit, right? So it says driven by that, it's continued to be a momentum in the Power App scenario, right? So that whole Power App scenario or suite that Microsoft has within their Power Apps, that's another dynamic as well that you got to factor in. It kind of be like how Google Apps is, like Google App Store. Apple iTunes, all that stuff like that. That's the value, that Dynamic 365 value within that kind of understanding. All right. So it says here, shares of Microsoft are down 22.1% year to date against Zoom's plunge of 41.8%, which we know that to be true, right? They getting taken to the woodshed, right? And it says Microsoft expects revenue growth. Excuse me, wrong one. Microsoft currently carries a ZAC rating of what? Can y'all see that right there?
Yeah.
What is his ZAX ranking right now?
So
number 4, sales.
Keep in mind, that's ZAX. That's not your thesis, but that's ZAX, right? But ZAX weighed those different dynamics that we're talking about and saying, as of now, they still have what they call like a Petri score. If y'all know anything about the Petri score and reckoning mechanism, when they kind of use that to kind of ID what a company's strength, value, peg, and all that stuff like that, that's another dynamic fundamental readout. It's like a form of a quant, equation to rate the strength of a company, right? And that will hit that one day again. I touched it maybe in 2020 at some point, but that's just showing where they rate Microsoft at this point. Is rated at a sale. Why not even a 3? Why they couldn't be new? They got at a 4, right? We talking about this out of 1 out of 5. They're at the high end of sale. Like what's that about? Right. So that says a lot, right? So that's just showing you the value of where is that level of softness or contraction? They rate it up against the broader market in terms of clients, users, or whatever, in terms of how Microsoft is either in the driving seat or they just kind of in the passenger seat and just going along and having to deal with all this foolishness, right? Or they just off the bus period and hoping somebody pick them up, right? That says a lot about the whole dynamic of Microsoft. Right, up against again other players, and you see this other little dynamics here showing you what's going on for other values of money that they're pulling in from different aspects of the business, ancillary aspect. This is a good little stuff to read through, right? This is the part of a lot of that stuff I do when I factor in my fundamentals for an earnings report. I go through a lot of stuff like this here. I see something, then I go click on it, and then I just go right click and go to another article. Or I click on something, I just be going on and on the spider web in that thing. trying to get much intel as I can, right? And that just helps at least to a degree to kind of get some understanding where how the markets are feeling about these companies. Does that make sense, guys? Y'all with me there?
Yep.
It really will help you. Yeah, help your perspective. I'm not, look, these are things I actually do. I ain't making this up. This is what I actually do, right? When I go through and I know most analysts, they do the same thing. They're just trying to find, place where they can compile much data that they possibly can, just to pose it against what they have in-house from the people who do their R&D for data, and they're trying to see where they at in terms of that that equilibrium, right? Are people more bearish than bullish? Why are they bullish or why are they bearish? What does that look like on a forward, rolling scale as opposed to a TTM, right? Trailing 12-month scale. That's all it is. It's forward and it's backwards. It's forward and it's backwards looking. That's all it is, right? And it just really helps perspective when you got kind of got to understand how to read those weeklies, right? All right, you guys with me on the YouTube, right? Got some family coming in. What's going on? Carlos Martinez in the building. Shout out to you. Shout out to Family Yoda in the building. We see you in the building as well. Happy to have you guys here on this Stock Talk Sunday, right? Make sure you hit that like, share, subscribe, right? Become, again, a known face in this space and what we're trying to do over here and help everybody. But, read through the weeds to kind of get to the value of the pond or the lake, right? That's what this is all about, right? Strengthen your resolve based upon knowing how to compile data. It's not hard once you begin to know exactly where to look and what to look for. It's a regimen based upon what? Repetition becomes what? Repertoire, right? That's what this is all about. Spin your wheels sometime. Get caught in the mud. Get stuck in an article. Get stuck on trying to figure out what this data means. Once it makes sense, then you make some big boy power plays or a big girl power play, right? So that's just how you look at some of those things. They're just getting raw data numbers, right? So now you got other guys like say strength of Azure Cloud, aid Microsoft. See right there, they focusing on what? The cloud, right? They'll let you know that's where the lion's share of the bulk of the money gonna come from. They need to focus on their biggest growth driving, which is that cloud business aspect of the business. Right? And that's how you kind of look through a lot of news articles like this and focus on what you think everybody else is focused on in terms of what Wall Street. That's showing where they put a lot of their time and effort in and figuring out whether or not this company has the ability to beat or be neutral or whatever or miss based on how they measure that company going to its earnings report, right? Then you got the off-brand ones like Muttley Food, right? It's saying why Microsoft stock might have a bumpy week ahead, right? Predictions for the 3 largest stocks for 2040. That's all over the place. Microsoft still wins second half price offering, right? Second place offerings, right? Yeah, I think one of y'all spoke to that. Y'all saw it as well, all right? And different little things like that, right? And we already know this whole deal with Netflix. That stuff ain't going to even materialize to the end of the year. Right, that's what's crazy about that. Right, that's not even up for books right now, for book value now. That's not even gonna happen to the end of the year, right? So it just you gotta know, you gotta read through the weeds. Their show just get you on the headline. Keep in mind, these companies pay for that stuff, right? They pay for that stuff too, just to kind of act as if they're doing something big and they really ain't. They just planning well in advance. Right, so that's just that. So that's how you kind of look through some of that stuff, guys. Just showing you how to hunt a little bit. Man, outside of that, y'all know I love tip ranks. Tip ranks is another place you can go and kind of get that, that little breakdown of what that looks like up against, the market. Right? Let's see. Just hypothetical. We'll do it really quick. Just kind of hit like maybe 1 or 2 on Microsoft here, and we'll move on here. I want to make sure I get the best use of the time in. So as now you see the average value of Microsoft still priced around about 344, but that's on the 12-month trailing value, right? Going into July 2023, right? It's at an average around 344, high 411, low around about 298. Right now the stock still sits at 260. It's down well over great little value, 32% from the value of the average range of upside, right? In addition, around about 40-something% up near 411 at top side, right? And stock analyst value in that gives it a rating around about 9 going in. It's showing an outperform rating. That's based upon analysts, right? But the P still sitting at 27, right? Is it priced, for perfection still, or is it somewhat in alignment with what they 23 value, right? I mean, the 2023 value of a PE. But everybody's saying the SPY is still overbought until it can get down towards that 17, 18 handle. I think right now SPY sitting around 20 somewhere around there again in the PE. As it says, still may be more downside for the market before we kind of actually hit that proverbial bottom. But we don't know, right? It's all speculative. But all we're doing is trying to connect the dots, right? But again, as of now, this right here, article right here, says now what? Microsoft freezes what? Open job roles. We know that's the case. Right? They starting to shut down, aspects of the business, letting people go. Right? That says a lot. I'm just saying that says a lot. Right? As of the what? In terms of this, I like this little indicator here, in terms of what Tipper has for the website traffic. Companies who make a lot of money based on their website. Look right here. Microsoft ain't been doing that over the last 3 quarters, 3 months. In terms of what, people hitting their website. Because when you hit Microsoft website, at least on that aspect, you're looking at it from the enterprise value, right? It's not just customers hitting it, like, everybody just passing by Microsoft, right? Looking at, buying, Microsoft suite, whatever, but to a degree, but not all of it. This is based upon the enterprise value, like big customers, right? They look for them big time people to come in and hit that website, right? Because they coming to buy Azure, right? Cloud business, or get connected to that Dynamic 365 value, or maybe the Teams or something like that. Who knows, right? They looking for big money clients. That's just basically what that's kind of showing you. Ain't really did a whole lot, right? You got a little uptick from May back to June, but still lower than where it came in at the beginning of March, right? Even probably April. As you see, it's just red, a little uptick there, a little uptick here, but nothing, to write home about. So it's very mixed, right? Because earnings is showing you just an idea of what that looks like, the numbers that people are looking at for consensus. Crowd wisdom, that is showing you how people feel about it right now. It's still sitting on the what? On the sales side a little bit, right? It's not even completely neutral, right? That says a lot. Insiders, where people feel about the stock, right? You just win a whole lot of different things up against different people. Insider, right? That says a lot, right? You had a nice little increase in May. Obviously, go figure. People bought that a lot of that news around that time, or the idea that the market was going to potentially rebound, right? Insiders kind of came in a little bit, you still have some selling too, though. And then the latest, you had some sales in July, right? You had 2 insiders that sold in July, or 1 sale at least, right? So that lets you know again if people feeling good, still good about it or not. Here's what's happening on the inside, right? You have 17,000, which ain't a whole lot, and then again another round about 106,000. Right, and this other places you can go and get more detail of that, because you can go to the 13D filings. You can go look at a lot of things like Fintel. Fintel give you a lot of that stuff up front, right? It'll give you the whole breakdown, right? That's why I love using Fintel. And that's old school. I don't know if you remember Fintel, Brandon. Maybe you as well, Chris. That's way back. We used to use Fintel way back in the Discord back in 2016, 2017, right?
Yeah, I think I heard you mention that before. Yeah,
Fintel been around for a while, bro. It's like right now, since that whole idea of the AFC 8 going up against the Wall Street, but they love Fintel, boy, because Fintel give that breakdown of short numbers, right? Because y'all know AFC 8, like, man, short interest here, bro. Y'all lying, bro. They have to came at the short Fintel, because Fintel is very bipartisan. They don't take no sides, right? They tried to say the Fintel was lying, bro. These people do this stuff for a living, boy. They ain't worried about the old dumb stock y'all worrying about. Like they just purposely try to skew it down to make you look like these people got fake shares out there, right? All these them old fake shares that everybody keep asking about, right? Joker be like, man, ain't nobody got that mess out there, man. You get out of here with that mess, man. Right? But no, it's weird. But Fintel again gives you a great window and being able to kind of track some of that stuff, right? They got the paid version, you can do that, whatever. But let me show you real quick in terms of that insider value, what we're talking about there, far as who in the stock, this, that, and the third. Or let me go. It's gonna be where are those? It's gonna be inside of the institutional ownership. All right, so institutional ownership will kind of give you an understanding of what that looks like, right? At its current pace, right? In terms of if people selling, people buying. There's the 13D filing forms. Y'all know what that's all about, because that's giving you some understanding where that's at. Let me see. Let's go to that's institutional owners. Let's see buyers. Hold up now. Where's the free version? I might have used up all my free values. All right. Y'all know I cut my script so much of these things. I'm definitely not paying for that stuff, but I might need to go through my VPN. That's why I normally do it. But nonetheless, you can kind of get an understanding by coming on here. It'll have it. Like if you guys go this right now, because I go through it a lot and just have to refresh to get my little free version, you'll see some of those people, right? You'll see what that's like. And that's the Peach Squad is telling you about right there as well, right? That shows strength and quality value. All right, that's a reading that a lot of these Wall Street heads use in that regard. It really does help. I'm trying to see what a company looks like up against, again, some really hard metrics, right? Some really hard metrics, right? So yeah, so as of now, I don't have any more free ones, but y'all get the point. Come to Fintel, plug it in. You should be able to see it. I just don't have it, right? I don't have the free version right now. All right. In fact, let me go to this one here, right? They do have the rankings at least for some of the other stocks. You can see exactly what's going on with some of these. They're just showing you where they at in terms of what ownership count of some of these stocks. Who are some of the top tier ones and all that. But that's just an overview, right? Not specific just to Microsoft, right? But you guys get what I'm saying there. Y'all guys got the gist of what we're talking about here, right? And even as far as going forward as the overview value of all the shares collective, right? Based on the value of the transport spec of it, right? So here you got, total value of institutional owners. So that are long or short, that's a good metric to kind of look at because you want to know what the short interest look like for a stock going into its earnings print. Are there less shorting, or there more, right? Have there been a reduction in shorts? Are they covering, getting out the way, or are they holding strong, right? A lot of that stuff matters, right? Now we get down to trying to look at some of that value of put call ratio. We can look that up on bar chart. Not hard to do there, right? As of just come some of the biggest holders right here, right? Of course, you see that BlackRock and Vanguard makes sense, ETF, right? But you get down to the weeds, we see the most recent dates. These are people who are kind of on that before earnings perspective in terms of if they buy and selling, right? You got values of shares here, right? Are they positive or are they neutral in terms of percentage value, right? What they reported, what the value chain, did they sell some, did they pick up some? You can kind of read through that and see exactly what that looks like, right? Not hard to do, right? The red ones are definitely showing you what selling, right? If it was green, that's definitely showing what somebody adding shares, right? And you can see the dates all the way down through here. Some of these players, there's a lot of firms out there that y'all probably even know about it. There's tons of them out there, right? And they just be holding large chunks of these stocks and just off the beat, propping them up. But you can come to this, scroll through it, you can see what's going on for us, what people look like going into the earnings. If you had the paid version, you'll get a chance to see a little deeper, right? It'll show you everything, cost basis, port value, at least, realized value if they gain or loss within their value within that. Some of them even have like put calls, right? If they got shorts open in it, they'll show that. Or if they got options in it, they'll show that. You see what I'm saying? So you can take it down to that point. All right. So that's just something to think about. So just some ways you guys can look at this stuff and kind of measure it up against, your trading, thesis and try to figure out how to map this stuff out, right? Add a little extra to your trading, strategy, if you will, right? Within your research methodology, figure out, where is that, sentiment shifting, not just from, I think I can, but just based upon some hard data, right? Some hard data points. All right. Right. So that's it. So that's just looking at Microsoft kind of overview. We ain't going deep into it. We don't want to get lost in the sauce, but y'all know what's going on when I'm, by being able to put that out there, you can kind of follow along and gain some kind of understanding. So between that, short interest, I would just say on a base scale, if you're learning, between that short interest and kind of some of those base numbers in terms of probability value based upon what the company's done over the quarter, reconcile that up with the option flow chart, you can kind of get a good little understanding to a degree of what that may look like, given that there was pricing in potential value of probability of success or weakness or just outright or get budget, right? A la Snapchat. But Snapchat got roasted, boy. And as always, people like, man, I bought a ton of them. I should have bought more. But you do what you do, right? So, I only spent like $255, and them jump printed over 800% a piece. So you like, hey, bird in hand beat one in the bush, right? Move on. Right. Look for another one, right? Look for an opportunity. I mean, outside of that, Google, y'all know what's going on with Google at this point, because Google kind of definitely in that same boat to a degree with Snapchat, even though it has other ancillary aspects of their business. They're not pure play ad revenue generated based upon YouTube. They got cloud stuff. They got other stuff. They got phone. They got hardware, right? But definitely everybody gonna be looking for Google based upon their advertisement space. As you see here, it says Alphabet is especially on watch after initial tremors from the digital advertisement space that Snap and Twitter set off. See what I'm saying? They worried about that because YouTube is starting to cut back. I'm a end result of that, right? They hit me with a couple letters, right? Like, you need to take off some of your double videos that you got posted twice. We're going to demonetize your channel. They was already doing that mess because of Ukraine, Russia stuff. They went on that woke campaign like everybody else and boomerang daggered themselves, right? It is what it is. But they start going through that whole idea of sweeping through their value, right? Because people ain't buying for that what ad revenues that YouTube provides. They cutting back on spending through YouTube. So because of that, YouTube is browbeating content creators and forcing them to kind of either pump out different or consolidate some of their old stuff and just whatever. It just ain't willy-nilly open where you could just even post old video and make money off of it. They consolidating all that stuff, right? That's a sign, right? That they fearful. They ain't doing that from a place of strength. I'll tell you that much, right? That's a sign of weakness, right? So that's what. The fact that obviously they didn't even provide guidance in terms of Snapchat, that's important. So it says whether their 25% drop year to date means bad news in price remains to be seen, because y'all know, let's be honest, if I had to put this in context in terms of all the tech stocks is releasing this week in terms of their importance, Microsoft, Amazon, Google, Apple, right? Those types, I would say everybody got their eyes actually on Google. Why? Because Google is the strongest out of all those. Why? Because it has the best of both worlds. They got product placement and service, right? And they have what they call ubiquitous product service value, because everybody uses Google, right? Internet value, right? Everybody don't have an iPhone. Everybody don't use Apple iTunes. That's the difference, right?
Right.
You got a good fan base, ecosystem in Apple, but they don't have that ancillary base case of Google that is basically used worldwide, besides in China where they banned, right? Right. Everybody else, they got them on lock dang there. Right? Google got every nation on their little thing up there where you can click and get your mother tongue and be able to use it.
Yep.
That's the importance of it. So everybody, in my opinion, everybody got their eyes on Google. Because if Google come up short, boy, that ain't gonna be good for the market. And that's what you already know. We got GDP, we got FOMC, we got other data to look for this week, right? Man, it's gonna be a watching week. Right, it's gonna be one of those weeks where you guys know get your money in order, get your affairs in order in a way where you can start taking the data that's coming out from this week and start looking at the back end of the year, right, and trying to figure out what this market may look like or shape up to be going into 2023. That's how important it is in terms of why I've rated this is one of the most important earnings that we're gonna get all year. I've said that weeks in advance, like that Q2 earnings readout. Well, that's gonna be that one. Right? That's going to be that one. That's going to be that one. Makes sense? Because the ramification that it has is very well positioned to kind of whether or not these companies can have, got that little, moment to try to work their way into convincing shareholders that, okay, we got ahead of this based upon all knowing that the Fed was going to cut rates. And because of that, we did X, Y, Z to weather that. If they can't speak to that on their conference call in terms of their guidance, that's going to be like moment, right? That means there's further softness that you have to account for. And the only thing that can save them at that point will be the Fed's doing pivoting, meaning less rate hike as they plan to out the rest of the year. Does that make sense? They already up in their hikes now. They want to do 50, 50, and 50, right? Now they went from 25 to 50 to 50 to now 75, right? Because the inflation going nowhere, right? They thought they were gonna be able to talk their way, talk inflation down. It ain't going nowhere, right? That did where that thing at. I don't know if I have it up here. I don't have it up, but anyway. But they can't talk them ways out, talk themselves out of just beating that they're gonna get right from inflation. Right? And they can't, right? They try and it ain't working, right? So now they got to, honor the value of being more critical and, pulling money back, even though they still raising their balance sheet. And like, how, right? Well, how y'all still print money? Y'all supposed to be tight at the same time. Make that make sense, right? That is you pimping or you pimping, right? What you do? You say you reform pimp or you just you still out there pimping on the side? Which is it? Right? We saw you out there on 37th Street, brother, the other day with the hat and everything. And the fishbone platforms on. Tell about you a star. Get over here, girl. Get over here. I see you. Yeah, you got one worker, but that's all you need to keep you solid. That's the Feds right now, essentially. Right? They need everything they can get to keep Wall Street somewhat chasing the idea that they may pivot, if you will, right? That's everything that hinges on that. Right. And so again, just looking at Google real quick on the chart, I'm not going to spend much time on Google and the rest of them like I did with Microsoft, but I just wanted to set a stage of what you can look for. When you go to break down these companies, guys, these things are very important. Why? Because it's giving you good context, right? It's giving you good context in terms of what you may need to look for, right? You never go into a trade unless you have a, at least, in my opinion, a 70 percentile value of probability to take a direct directional bias. At least you need about 70% plus to take a outright directional bias without necessarily having to hedge, right? Because in this marketplace, everything is at this juncture. Let me say it this way: at this juncture, it's critical. Why? Because this is when Wall Street is at its most desperate perspective, right? Because it's trying to slow the bleed, and the Feds is trying to rip the Band-Aid off, and it's causing major conflicts, right? The dollar all out of whack, the VIX is all out of whack. Nothing is working the way it's supposed to in terms of antithetical hedges. Think about that. Look what gold doing. Gold is like supposed to be a perfect hedge in this environment. What gold doing? It's selling off. It got down in the 1600s just recently. Like, somebody make that make sense. Bitcoin was made to be the perfect hedge against moments like this. And guess what Bitcoin doing? It's correlated with the tech sector now. Stuck, got them. Like, you couldn't make this stuff up. Like, the market is broken. Why? Because they spent too much time artificially making it not work the way it's supposed to, and because of that, they've now having to reap the benefits of a broken market. It's like a bad relationship, right? Like, yeah, I thought you was this, and then you find out, like, yeah, no, you ain't, no. To the no. They got that song on auto or replay, right? Because jokers understand it now. It's so much going on in terms of the data that's coming out, and you saw think about if Europe is obviously is a mirror image to a degree of what American markets will look like in terms of that global dominance of power that they utilize between manufacturing and controlling, the banking sectors, and all the different parts of that. And if they getting it, I mean, you can only imagine it's a domino effect from there, right? Because those will be like the outposts of other nations that do business to try to get in on their books because they need that level of management to a degree, right? And they're failing. They can't focus on that and also keep their house in order too. That's why Europe in big trouble now. Again, 11 years before they had a rate hike. Let that marinate. It's been 11 years since the Eurozone actually had a rate hike.
That's crazy.
Like, what they've been doing, right? Like, what y'all doing? Y'all just, man, look, all right. Right? Yeah. Inflation, like, yeah, play with it. Play with it then. All right, we got something for y'all. You want to eat crumpets and freedom fries and whatever y'all doing over there.
You said freedom fries.
Right? Y'all can get their work. That's exactly what's going on. So same thing. Look at the daily chart. What do you see right here? Google looks synonymous to that of Microsoft. The only difference between Google is that they just did a split, right? They just did a split, but look where it's at on the daily chart. It's below its 20-day moving average. At least Microsoft was above its 20-day moving average, barely, right? But barely. Can you see? Barely. Right? Get in the back of that squad car in. You barely see. You don't get that. But at least it's barely above it. Google, below it. Make sense? That's problematic. That's problematic. So guess what? They got 2 days, right? You got 2 days to get your affairs in order. Why? Because if you can't at least get back up towards that 20-day moving average, that's going to leave a sour taste in option traders and some of these bigger banks or bigger money managers mouth in terms of how they going to rate the potential value of Google potential getting that bullish favorability. Right? Either it's going to be bullish, neutral, or bearish. Right? That matters. So definitely that point, that equilibrium point, in this case, the deviation, in my opinion, again, just my opinion, guys, not investment advice, the deviation for Google is around about 110 to 112. At or around that 20-day moving average, right? We can juxtapose that up against the option flow chart and see if there's anybody thinking different. Why? Because that's what you want to look at and see where a lot of traffic is built around, people putting their money where they mouth at. Let's run it over real quick and look at that 110 and 112 strike price. No, that's it, right? 110, 112. Let's go see what that looks like. Right. So really quick here. So looking at Google for next, let me see if it's next week. Nope, we're on the wrong one. And I caught that. So first, let's go look at the put to call ratio. We'll do that first. Look at that. Well, we know that call volume is based upon the split. Let's be honest. Now, it could be a mixture of both, but a lot of it's still based upon the fact that they just did that split, right?
Right.
Same with the put to call ratio, right? So you kind of about net to net still around about half, right? So you still see overwhelming bullish sentiment of what, post split, maybe a little pre split. People buying the idea that they feel like, okay, Google got to bounce, bro. It got to bounce, right? It's Google, right? But again, we know what that's all about, right? They can't take that approach only. But let's go look at that 110, that 112 strike price on the call side, and let's see if people putting their money where their mouth at, right? How the song go again? It's cheaper to keep, right? They finna have to deal with that. And there you go. Look at that. See that 110? How many contracts? 7,500 came in Friday before the bell. Go figure. Look how much that contract lost though. $3.35. Oof.
Tough. That's tough.
Oof.
What are these calls, correct?
Yeah, that thing was $6 a contract Friday or Thursday going into Friday. It was at $6 a contract. It lost $3.35, half of its value on that pullback. 968 floated from Thursday into Friday. Think about that. Right? So that lets you know how people already felt about that split. Right? That's it right there. But she was looking good the other day, bro. But then yesterday she came out, but I don't know what happened. You're like, oh, speed on. Right? This is that reality. They're looking at this stuff. They're clocking this stuff. Look at that 112. We ain't making this stuff up, guys. Look right there. What you see at the 112? 6,000 came in on the intraday. 25 sitting on the what? On the open interest. What does the chart say on the Google at that 20-day moving average? Where it's sitting at right here? Can y'all see that 20-day moving average here? What does it say?
112.
112.52. Look at that. The markets are efficient. It's just looking at stuff like that and lets you know how people are trying to play back towards risk. Right? Yep. Or maybe got risk on already, but they obviously under because stock obviously Friday got what? It was a mess, right? The whole price action for Friday was just all over the place. Right? So now it becomes a game of okay, midline, we got a medium pivot point around about 105, 106. We see that even the candle didn't come down far down, but we in terms of the linear regression band, you got some chatter there. You got a little support. There's blotchy, but it's there, right? It's blotchy, but it's there, right? So let's line that up a little bit. Let's put a raise on that, right? Some of y'all got them good barbers, right? Y'all know they're good barber. They put that raise out, right? Right? That line finna be dressed, right? Now you got spillage here, of course, but we'll just say, given that all this right here was just fool's gold, we want to just look at that this area here. You got touch, right? Potential touch here. Obviously here, touch. Right here, see right here? Touch, right? So now that's going to be pseudo support. Pseudo support sits at around about 106. Go figure. How much money y'all want to bet is some weight around that 106 strike put?
Oh, it is.
Now, even though it closed at 107.90, but still, I would say even Thursday going into Friday, people probably already eyeing it. Why? Because they thinking like we thinking, right? Where's that where's the money at? Where's money sitting at, right? Where's fighting from, right? So let's go look at 106 put, right? Let's go look at that 106 put. Right here, look at that. Couldn't make this stuff up, right? 3,700 contracts came in open interest Friday, 870 on the open interest value, right? That's interest on the regular volume, 3,700. Open interest at 870. Look here, look how much it gained though. It gained a whole $1.85. That means this thing was $1.85 cheaper coming in Friday. Y'all do the math on that. That thing printing right now. Now keep in mind, this is for this week. Eric, see, that's the slickness that I do. I buy, even though I have a contract expiring that week, and if it's like a Thursday or Friday, here's a secret that I do. Y'all don't have to follow this. I'm not telling y'all to follow this. It's not a financial advice. But knowing it's a real reputable company going into earnings on the previous week, I typically buy my puts and my calls and my buys at that Thursday or that Friday. I've said this many times, no secret. But I buy it for the following week. I don't buy it for that expiring value for that week unless I do like a twofold, right? I do some for the following week, and I may do maybe just one for the week that's expiring, just to try to play the price action, right? That's a good strategy. Why? Because number one, you have better theta, you have better delta, And given the value of the sentiment of the stock, right? Given the sentiment or the bias, if you will, that gives you good opportunity to kind of what? Play into people fear, right? Or they feeling good about scenario and stock obviously going your direction. You got people thinking about contracts that are going to spiral for that week. If you flush those guys out and whoever control the value of that tug of war between bears and bulls, that's a good moment to eat you a good little bag on people capitulating for that week is expiration ends. And you still have the ability to hold it until next week.
Is that the one up and one down strategy there?
Yep.
Got you. Okay.
Right. You see what I'm saying? And you get to play it both ways. Or again, if you're even doing a threefold, because the threefold, saying if you're doing like at least, two the hard way and one the soft way, right? That means wherever your direction of bias is, you put that weight on that side, and you do one to that soft side, right?
Right.
That way you still covered, right? But if not, even if it's a direction of bias and you still have days to get to a certain binary event, then you just go hard. You go to straight 2 or 3, the hard way. And you just close as necessary based upon direction of value, right? Or meaning how the market is responding. You know what I'm saying?
Right.
So
now
go ahead.
No, I'm sorry. To the strike price, do you get it at the money or do you get it a little away from money?
I kind of play it closest to the money as possible, especially you got them last 2 days. Why? Gotcha. Because I remember I did a video on that a while back. I say it depends on those days expiration, right? Because we know contracts expire like on the SPY. You got Monday, Wednesdays, and now Friday. Now they got these sub ETFs that you can buy now, like within that. You're gonna have some of them now gonna have like 4 expirations in 1 week, right? They got the market all over the place now. But still, most traders are they're conditioned to trade Mondays, Wednesdays, and Fridays. Why? Because that's the direction of bias you get typically coming from the SPY, given economic data and how SPY typically swings at around those days. Make sense?
Yep.
You got a contract expires on a weekly basis, by value of natural value, but it still is repped against the SPY, right? So you look at it from that same way and say, well, okay, if we get past Wednesday and however the market responded that day, if it was a theta burn day, if the market maker were trying to kill option because people came late, they didn't buy, let's say the previous week, or they bought Monday and some data came and spoofed the market.
Right.
You got to have that cushion to say, well, at least Thursday ain't nothing they can do. Either they can try to kill option that day, or we may get some data to move the market, but at least I'm safe, right? I'm safe. Right. Contracts expiring on the spot on that day, so at least it's just gonna be based upon pure buyers and pure sellers and how they feel about the market. Make sense?
Yep.
Right. And so that's how you will play that strategy, and then it just becomes a thing of value, right? What you're willing to put up for those moments. So you say you read it from a place that with Google just doing that split. You see right there? Look at their lots. I mean, it's gonna be spread. They got spreads of
50.
And also
not 50, 25.
Exactly. Yeah. They got 25-cent spread values in terms of options. You got to like that. Why? Because they're saying the options market in terms of this perspective is giving you pretty much a good favorable beta. Right? As opposed like if you just trading a regular stock like common shares, shorting it. You remember when you short them big stocks on TradeNet? Yep. And we let's go bombard stocks that have tight spreads. Yep. Right? We kill it. You see what I'm saying? We all hit it at the same time, and next thing you know, that thing dropped, 7, 8, 10, 12 cents. We got like 5,000 shares on that, man. We finna kill it, right? And the options is the same way, right? Now you do that up against Tesla. Tesla got spread on the common shares around about $3, $4, $5, $6, $7, bro. You stuck if you get caught, right? Yeah. When it's acting real retarded, then other times it's around about 75 cents, 6 cents. So if you come in on the market order, you already down 70 cents. Right? You like, God, dog, Tess, you better get to work. And most times out there it's gonna move, but that's how it is when you mark it in. So we always tell people limit in best you can. Always look at limit order. Right? And it's the same when it comes to options. I do more limit orders than I do market. I'm sure of it. Because I've figured out now how to play that plus minus of that tick value of spread. As you see what Google saying 25 cents. If it's on right now, because 106 puts right here, that's the calls, is it? Let me see. That's the call, right? On the put, let's go back to the puts. If it's showing 106 here on the puts at 228, right? At that point, let's say it got right for the bell, and I'm like, okay, if I want to get this price cheap as possible, right? And that puts it around between at the as you see, it's on right around 265, right? On the next 105.75, I'll place my potential limit order around about what? Around about
260,
75, right? Somewhere around there, right? Try to play that middle. Because if you find one joker just trying to what, either get in or just give out, they might what hit that strike, right? You may have that little moment of flush real quick, or that moment of spike when the short cover, and that'll cause that put to go what? Go cheaper, right? Because y'all know when it's going up, the puts go cheaper. When it's going down, they become more expensive, right?
Right.
Same on the call side, no different. I'll try to limit in to get the best price I can. I had that happen several times. I caught that price, I'm like straight. And sometimes it was that inevitable bottom when it came to at least the options, right? In terms of the price premium. You know, the stock could be anywhere, but it'll just sit there. If there ain't no premium add around it, you ain't gonna really lose on it. Make sense? And so
you say what? I'm sorry, you said 170?
270.
270. Okay.
280 right here at the 106. So
Okay.
it'll be around about 270, right? I'll place it around about 275. It'll be around about 275, about $5 cheaper. Between that and 270, it'll be between 270 and 275, knowing me. Right.
Okay.
And it depends how much time I got before that bell rang. If I'm doing the last 10 minutes, if I, you know, because that's when the imbalances come out in the marketplace. That's when you typically get what? Spikes or dumps, right? That last 10 minutes, imbalances come out. You're gonna get that abnormal move. I get right in that window. I be native. Hey, man, African caught that little car already. Yeah, right. I'll wait. I'll save that baby.
Wait for the last 45 minutes, 30 minutes.
Yeah, and even more so that last 10 if it's a Friday. Why? Because that last window, that imbalance window is that last kind of what swing buy that you get from institutions telling you where they're gonna put their money at going into what? That next week.
Next week.
Now, case in point. Do y'all happen to know what the MOC was for Friday?
No.
Off the top?
You said what?
The MOC for Friday. Like the market on close, right? You know, you get that market on close, that's showing how much money went to the buy side, sell side, outside of imbalances and dark pool. It was for Friday. I got it saved. I didn't get a chance to even post it. And you know, for the fam, let me see. It was I got it right here. It was 1.3 billion to the buy side and 668 million to the sell side. I repeat, 1.3 billion to the buy side, notional, to 668 million to the sell side. What does that mean? What does that mean, guys? 1.3 billion to the buy side and 668 million to the sell side. What does that mean in terms of what Wall Street was looking to do?
Buyers and sellers.
Right.
That means they were still favorable towards what? Swing buys into Monday than they was on the what?
Selling.
Okay, but what did the market end on Friday in terms of the SPY?
And
it closed
down.
Yeah, 395.
Right, you see right here, 395.09. Right now, here's the interesting. That's on the daily. He said what? We opened up on the day around what? 398. We hit a high 400. Right, that's that gap fill, and we did what after that? Right, we pulled back. Right, everything from 400 all the way back down to the into the close was what? Free money for puts.
Yeah,
because you not only have to close a gap, you have to what? You fill it and you close at it or what? Above it to have true confirmation. And or you say, okay, I'll tell you what, if that's the case, if we do hit it and we don't just have enough oomph to go through it or close at it, the next thing they start saying is, okay, well, where do we close? Because if we get rejected real hard, we got to take out a form of what? Support, right? That almost but certain tells you how people are going to what? Feel about going into what? That next trading day, which will be the Monday, right? But where do we close? We close inside the what? Inside of this what? That breakout zone, right? In this case, you say, well, okay, with 392, 393 can't end up being what? As they say, pseudo support, right? It's a supply zone, a demand zone. Why do we know that? See right here? Look right here. Close right out there on the meat of the counter right here. Even during intraday, the market flushed out of 393 and held support there. That's all market makers needed to see. That's all hedge funds needed to see. They'll say, I tell you what, we close the gap. We can close our calls that we swung into the gap. And now we just try to see where we can what? Build support going forward. If you look at the chart from the way it came from off this pivot here, it's actually showing some strength, even though it closed down. Right? It ain't like that wick. Right. It ain't hanging over, right? It ain't, just hung back way back down here, right? At least back down towards that 390. Then they'd be like, oh, boy, we might be in trouble, right? So matter of fact, let me drag my little candle over here.
Yeah, it ain't really take out that green candle, but
right. You see what I'm saying? We got some wiggle room there, right? So at the end of the day, it closed higher on the daily than this what? Or at the lowest point of what? The previous candle here. Like you just know there, Chris. So it's right in this window here. This is a window of opportunity here. You got 400 hours even number. We know that was gonna be resistant. Why? Look at that big old candle right here. bro. Like, bro, y'all look. You finna go up against what up, Warriors? Come out to play, man. Look like, bro, we don't want no smoke today. We don't even want no smoke today, y'all. Y'all got it.
Yeah.
You got that clanging them bottles, bro. So that ocean deal, right?
Right.
That's the LTD, bro, with the long arrow in the back. Y'all know you're gonna pick up a station in China. old car. That's what this is showing you, and that was your gap fill. My swing calls I brought into that, they filled their mandate. After that, I was like, you know what? I'm taking profit, even though I want to buy puts on the back end and really try to double up on the some of that intraday. I played an intraday maybe for at least down to like 3.9. I sold too soon. It is what it is. You know, Birdie had beat one in the bush. But I played back into it, you know, and say I'll catch one, but I'm not gonna swing any. That's the only thing I'm in terms of like puts, like spot puts, right? Because I had my Snapchat puts, of course, they just beasted. I had a Facebook put that I bought because of Snapchat earning it beasted it. And then after that, I had some little some small stuff that I had carried over from the week, right? Some ancillary little plays. But outside of that, those were the lion's share, breadwinners of the day because they control the market, right? They brought the market down, which Snapchat did, right? Even though SPY was trying to buck the trend, keep in mind when Snapchat was going down and still going down even intraday, SPY was still trying to what? Pump. Yeah. That's how we got to 400, right? Keep it call what it is. And Facebook didn't participate. Because typically it participates when SPY going up, Facebook we with it, right? But Snapchat had tied Facebook to its hip. If I go down, you go down. It's that kind of party, right? It was snitched on Facebook. It snitched on them, right? And the SPY still went and filled the gap at 400 and left those two fending for themselves. And it still closed again in that this zone right here. And the notion of value was still as we closed, when I was looking at the balance, when they came out at 350, it was still some people buying some of these big tech companies because they got earnings. It was a buy order on I think Apple. It was a buy order on a couple other tech companies, if I can remember. And that's what helped this notion of value, or in terms of the MOC, have that level of 1.3 billion to the buy side and 668 million to the sell side. Because look what the market did all week on bad news. It was bullish, right? In terms of this area here, because this is on the daily chart. Look at this here. Bad news. We got bad news. All this was bad news, and the market just kept going up. You see what I'm saying? That means that's somebody they're saying, you know what, come hell or high water, we're going to close that gap. Right? That's all it was. They were determined. And they did. It closed that gap. That's the only reason why Netflix was able to get that lift, bro. I can guarantee you. Right? It's just a lot of different things playing into it. So for me, looking at this and saying, okay, well, we know a lot of people pricing in 415. They wanted to kind of come test that area again because that's when it failed that miserably up here, right? It hit it like a million times and failed, right? That's when I bought a ton of puts up there. But I was just loading puts. Right, that drop was great, boy. Boy, look at him. I'm looking at the same thing here because 400 now, again, from a 30,000 feet perspective, y'all know my mentality, guys. I say this all the time in our training sessions, guys. You got to back out, guys. Look at this thing from 30,000 feet, right? We know day-to-day rigmarole can get you caught up, right? But one thing about markets, when they kind of are showing you proverbial trend changes, and the markets are always trying to fight to turn that trend, people who got big money, they obviously playing a lot further out with their positions, right? Clearly. But the chart is telling you in so many ways, again, where are we in that grand scheme of things? Now, y'all know what looks interesting about this area right here? Can y'all see where my mouse is circling over here? Let me move this out of the way. And then we'll come this here and break this up. I'm using the weekly here because we can back it up for a reason. But see right here? See the area right here, guys? Now I'm circling right here with my mouse right here?
Yep.
Yeah.
What's significant about that area? Looking to the left of that. What does it look like to the left of that area there? Look right here.
Hold on. Hold
see right
on. What you got right here, Oba?
You see what I'm showing you right here? See right here?
Yeah.
That was that last Fool's Gold pump. It hit resistance at 416, out of there. This right here, all that struggle that it did, right? They said it was that struggle all week long. And only thing they were fortunate to do was close the gap. They couldn't close above it, but they closed the gap, which eliminates the idea for Wall Street to make an excuse of why they just have to just buy to say that we still have favorability. Now everything is leaning on the big tech stocks that are coming out this week. The slope and line of resistance that they pierced above here puts it right back around about 383, right? Because that's what actually 386 to be exact. But that's where we say, okay, right here it's an equilibrium line. That to me would be the deviation between going back to the lows of 362 or hovering above that area and build support and try to rock it back towards that what? At least to a 406 next resistance. From there towards what? 410 and then 416. Now, how much money y'all want to bet there's some love around that 383 strike put going into next week?
Oh, I bet
You said
it
that
is.
383.
Yep, that 383 put.
Yeah, I bet it is.
Let's go look at it just from at least Monday's expiration. Then we'll look at Wednesday too, right? We're going to wind this up here a little bit here. But just showing you going into Monday, right? That little day of tomorrow, basically, right? And that's we don't have any bad data on tomorrow, right? We got nothing to really shake the market, right? But we know that one will probably be a little bit off the beat path. But look at the put volume. Right? Not too far off, right? But 810 to 782, you know, look at the open interest though. 2.5, 2.6 value there. Differential. Right? Somebody getting bearish. Why? We know why. Because look at what's coming this week. Right? Armageddon, right? Literally for the market. But you're getting in fast order. Literally. Yeah. Right? You're getting bond, shelter protection, insurance. They putting out getting them some helmets. They look at you're gonna get right. Let's look at that 383 just on GP. Just on 386 on GP. Look right here, guys. I ain't making this up. Well, hold on, that's the wrong one. Sorry. Right here. Sorry. Now that would be an all shoot to think the market fall from where it's at now, 395 down to what? 390, 383. Give it, right? That's just too soon, right? But you still see there's some favorable buying there, right? Them country was only what? Now they're only 5 cents a piece, granted. But again, we know what that's about. Let's go left.
380. So them 385s is crazy.
Yeah, again, you can see what's going on here. It ain't hard to see what's going on here. You see exactly what I'm talking about. Y'all get my point. 386, right?
Yeah.
I said 386. Why am I looking at 383? It's been a long day. Y'all get what I'm saying. It was supposed to be 386. Here we go, right here. Right. I'm looking at 383. The 385, 386 that I'm looking at. Right. That's a pivotal point. So you see that 11,000, 6,000 on the open edge. Right. Real quick. Let's go to Wednesday. Right. Because we know by Wednesday we're gonna have what? Microsoft and Google earnings gonna come out Tuesday after hours. And we got what on Wednesday? The biggest day of the week.
Yep.
FOMC
meeting.
They're gonna drop that rate hike, right? So you know they're expecting Wednesday to be what? Super volatile, right? First, go look at the open interest and regular. Look at that. 300 to 300,000 on the put side, about a buck and a half on the what? Call side. Look at here on open interest, same way. About 100,000 contract differential at that point. Again, let's go look at that 386. Now, this is all beat pad. This ain't even a recommendation for 386. I'm just showing you how they may be trying to play towards certain pivots, right? Look at this 386 right here. It's right there.
They stacked underneath that.
Right. Look at that. Even the 388. Y'all know close to the money is going to be real good because y'all know SPY has a good delta. That's why you can play close to the end of money with them. And it's not over expensive. Make sense? That's the only reason. But still, we're saying crazy picture would be if these guys hit a lick and print, they'll eat, right? Because again, they plan at a certain what? Structural pivot point as opposed to saying, I'm just going to play the close to the money, play for the inevitable potential drop. If Wall Street don't get their way, those people are going to clean or ring the register. You see that at 39,000 at the 390s, 27,000 at the 391s, right? And whatever from there, right? So real quick, let's take that out to Friday. All right, let's take it all the way out to Friday. Here we go on Friday. This is after you get what? FOMC, Apple earnings, Amazon earnings, Microsoft earnings, Google earnings, Meta earnings, GDP. GDP comes out what? Thursday.
And then
golly.
Job report come on Friday, huh?
Bro, I ain't gonna get no sleep.
Yeah.
And I got a lot of stuff going on. I've had a lot of stuff going on recently, guys. Y'all my details. I tell y'all, man, I thank y'all. But y'all know I ain't been around like I know to be. Y'all know why.
We was thinking about you.
I appreciate that, man. But y'all know anytime I go radio, it's more than I got a lot going on, right? And I try to be accountable when I can, but y'all know how this stuff go, right? Yeah. That's why y'all guys fill in those slots, right? That's what it's for. That's what we hear. We're a community, right? Everybody got equal value in this because we're trying to help each other get better, right? And because of that, it increases your ability to be a little bit more proficient. Why? Because you learn. I always tell people, as the saying goes, when one teaches, two learn, right? Robert Heinlein, right? And in regards to even your own autodidact value becoming a self-taught, a self-learner, you go back and start thinking, okay, what are we? I mean, we went over this that time. Let me go, dig in there a little bit, right? You start uncovering little gems, little jewels that's gonna help your resolve. Then when we come back and meet, like, yeah, I was looking at some stuff and I found this or I found that. That's typically how it happens. Y'all remember this? Back in the old Discord days, that's how we all should be, did we not? Like Mag would pop in there, like y'all know Mag used to work for Apple. That joke would pop in there like 2 a.m. They got to go to work next day in California. Like, bro, you supposed to be ski. And Mag be there talking, because he was Indy. You remember Mag, Brandon? And Chris, you met it. You remember? And Mag like, yeah, I'm, when you buy this put, and we like, man, what is a put? And Mag, you get to breaking it down. He's like, yeah, I found this data on this and this, that, the third, right? Because he worked for Apple. He actually goes kind of giving us slightly. Inside information to a degree, slightly. About Apple. I mean, seriously, y'all remember that? Yeah. I ain't making this up. And we be like, okay, that's interesting, right? And me, Stock God, you guys, and Tyson Bass, and everybody, right? You used to be soaking it up, right? Because we were somewhat like, if you will, we were like the newbies, right? And we know we were some headhunters, but we were like the newbies. And so Cali Girl, of course, and of course Connor, right? Of course Connor, and those guys, ATL Trading, the whole crew, right? Cali Raw. They used to be giving out that good game, right? And we be like, okay, that's interesting. They dropped that data. Mr. Lord come in, drop some data, and we be like, oh, this is really good information, right? That's what it was all
Green
about.
Show his results every time.
Yeah, yep, Money Green. Yep, you already know Money Green, and then also our brother I'm from the butcher his name, but our brother that was the truck driver. All right, he actually in the group, brother. You know what I'm talking about too.
Yeah, I know you're talking about.
Not Money Green, but brother. God, dog. I'm having a brain. But anyway, really good.
I remember them two used to get into it all the time.
Exactly. You know what I'm talking about. Right? They used to be on each other's back, but all the time. All right. But again, that was great because we got a chance to sit at the feet of a lot of these guys, and who had been in the game, at least on a stock trading side a lot longer than we did. Now, even though we might have been investing and doing a little penny and stuff, but we was at circle a lot of game, right? And then kind of Sal just kind of brought it all together, right? So it was really good information and good intel to utilize it and say, okay, man, given the conditions, we can take this and we can do that. But that's how I always remember it, right? So when I go back through my memory brain, I start remembering a lot of those moments, and they start coming back to me vividly. I'm like, dang, I remember that night. I remember we was doing on demand. We was breaking down this chart. We were looking at things at this level. Right. And looking at this and what we was at that point. And that's how I take this stuff. Right. So it's incumbent that we all take that level of approach to it. So as I like to say again, permanent interest is the only thing that tie people together. Mm-hmm. I repeat, permanent interests are what tie you together, not the ideal that it seems to be just platonic that you should. No, we have to have an interest level. That's what keeps people engaged with one another, right? Mentally, from a communicative perspective, right? Physically, it's those interests. The market is always giving us signals, that we need to pay attention to, whether you risk on or you not. If you're not risk on, you still get good observation. Make sense? Or you get notification hitting your phone while you out doing other stuff, living life, and you're like, oh man, that's some good information. Man, that's interesting. What happened? Oh man, right? At least that was a heads up, right? Oh, pay attention to that, right? Next time you probably engage the market, it's there. Make sense? Mm-hmm. So it's all relative, guys. I always say that, man. Utilize that stuff, man. Repetition becomes repertoire, right? Don't sleep on it, right? Build from it, right? So when you see things like this here in the market, you say to yourself, okay, this is why the market is acting like this. This is why we're dealing with that, right? We're dealing with this or whatever. You can kind of get an understanding why people feel a certain way about, certain aspects of the market, right? And that's all it is. It's about building on what? Those building blocks. Get better, right? Because y'all know this stuff translates into your personal life, right? It's good skills, isn't it not? Right? Mm-hmm. Right? It does. Discipline becomes what? As they say, due diligence and discipline equals what? Dollars. Right? That's how stuff goes. You gotta put in that work. You can't be sloppy, right? You gotta build, right? Work on yourself, personal accountability, right? That's what this is all about, right? So, but looking at that again, that's the whole ordeal with Facebook. Again, like I said, look at what's going on. Look at the chart. It looks just like what it did right here. It ramped up to that resistance and what? It failed. This right here ramped up towards the resistance. As of now, is holding, right? But you would say, given all the data we got coming this week, boy, they're gonna have to really thread a needle to not fail, right? Mm-hmm. How you gonna get past rate hike, tightening, QT tightening, and GDP, which obviously at this point is seen to be at least 80% negative GDP growth. Based on the GDP now, calendar is showing us around about a negative 1.6, which denote 2 negative quarters back to back, says that we are in a technical recession, which we've been called recession 2 months ago. Actually, we called it recession about 3 months ago. But 2 months, technically, I was really kind of saying, hey, we're in a recession. But it's almost but certain unless they cook the books. Because you can't account for all those layoffs that's on happening now. Unemployment is going up. Wages been stagnant over a month and a half ago, right? Longer than that to be exact. Let's just keep it 100. And then what? Inflation is still sticky. It ain't going nowhere. It went up when everybody thought it was going to come down. Think about that. It went up in June when everybody thought it was going to contract. And everybody was trying to call the bottom, right? And they were just wrong, right? Even though the market turned, that don't necessarily mean that the bottom was in terms of what? Inflation peaking, meaning the bottom was in. Make sense? So a lot of this is just them front running. They tried to be slick and they lost. But because of that, they don't want to take an L on face value, and they try to will their way. You see what I'm saying? That's all this was. It was just a lot of bullets drift willing their way because markets had hit over sold perspective in a lot of cases, and people say, well, I cover, make profit, eat some of this money down here, and I just get a better short position. And we had until we run into a next level of resistance. See how that worked? It's better to short up here than down here at 370, 363. Make sense? Right? Think about that. That ain't rocket science, right? I'd rather risk money here as opposed to down here, right? And that's all this was here. Same way. When we bottom out here, I'd rather risk that money to the short side up here, playing up against, descending line, sloping line, resistant points, that we see clearly as supply zones up around here as opposed to, down here. And a lot of times people get caught. That's how they get caught, trying to trade the market and options, and they keep getting run over because they haven't figured out perch point positions in terms of the direction of buyers. They try to short at the direct bottom. Right? Wall Street ain't never look. Wall Street sometimes is given, but look, these some high level crooks. they ain't that given. But again, just to show you what I'm talking about, same way right here. See right here, that 416 area, same thing. Drifted up towards that point there, that 4.5 area. Even though we went down to 462, pull back. All our levels been right thus far. I keep saying that. Y'all know what I'm saying when I say that, because y'all know y'all been with me day for day for this stuff. For y'all been hanging out with your brother, and we just been mapping this stuff. These lines end up here after the fact, guys. People know that with us. We don't just put the lines in after the fact, right? We layer these lines into information a lot of times. So we're already forecasting a value of, at least technically, what does that look like up against the fundamental analysis that we're waiting to get or that we already have. And we make our decisions based upon that. I'm not shorting at the bottom. I'm covering at the bottom for most cases, and I'm trying to establish a better short position up at around perch points. Right? So it's just something to think about. So you see some similarities there. That's what I'm talking about. Similarities. Here, similarities. Right here, even this little area here, similarities. Nothing different here. Nothing new here. And now the market's up against that same reality. Right? That's why you got 405, the 20-day moving average right here, which is 405, actually the 406. You're going to have a lot of call entries around 406, 405, and then the 410 area. I guarantee you. Real quick, let's look, and we get ready to get out of here in a minute.
You hit it right there, right on the head.
Yep. So what we got? We'll start from, let's go to 25th. Let's go to tomorrow. Let's look at that, let's look at that 405, 406 area. See right here? 21,000 came in Friday. Nope. 10,000 on what? There it is right there. There it is right there. Right. So again, and you see everything underneath that definitely gonna be big because we're talking about just because it's a SPY, right? You could buy a lot in the money because the price value, right? But 162,000 coming in for what? Friday, entered the Monday. Look at that. There's some jokers on that buy side, bro. They hoping to get a return back to that the resistance point. That's technical though, right? Yep. They want that retracement. Yep. Right? Prove me wrong. That's how the market looks at. Prove me wrong. They ready. 395, 396. Look at that. 75,000. 96,000. Loaded. They ready. Now let's take it to Wednesday, right? Because that's when it's going to really be what? Woo. But there's going to be some fireworks. Right here, same thing. 7,000. Look at that. 3,000. Right? Same reality. The contrast there, at the close around 50 cents a piece, 40 cents a piece. They hoping, right? You people here like, man, boy, just in case. How that song go with Tank? Just in case. How that song go? I make it. Y'all know what I say that song.
Just in case. Don't make it.
Man.
Right?
It ain't
Boy,
right.
cause you know, just in case Jugger don't make it home, boy, you know why. But they went down in flame, bro. That car broke down out there on 75. They ran out of gas. Gas price too high. They're trying to get to that prize though. Same thing. Look at the Friday expiration. Now look at that. The put call ratio for Friday. Oof. Look at that. 416,000 were bought on the put side, 224 on the put on the call side. Look at the open interest here.
That's crazy.
Y'all see that open interest? Boy, that's a 3 percentile put call ratio. Literally. Somebody feeling extra bearish.
Right. Somebody planning something.
Right. Whether they successful or not, they dang sure ready. They got their protection on and nothing else.
Uh-huh.
Last time I checked, they were overturned Roe versus Wade. Ain't no babies coming over here. You're like, boy, Joe got on, boy, got on saran wrap. Boy, look, ain't nothing, not today. Not today. Right? Right? Elon Musk, shots fired. Right?
No way.
Right?
Look,
Shots
all
fired,
of his,
Elon.
all that's in at 380.
Yeah, look at that. But look at that. Look at them 4.6 and 4.5s. Right? Or what we talking about here. See, 15,000 on the 4.5s right now. For Friday. Bro, them contracts lost $1.14. They lost 50%. Into the close, you know doggone well they were loading up that 4.5 strike.
Mm-hmm.
They put $1 on it. That's some guy, I got 5 on it. Them just put a hot $1 on it. 4.6 is 20 cents cheaper. Or close to 20 cents, right? It's $14, $15 cheaper. I put 80 cents on them. They'd be willing to let them go to worthless to test the value of just in case the market get any favor them or better than average. Y'all, because y'all know that's just a halfway point. That's the wayward point. 4.6 is just a halfway mark. If them numbers come in better than expected on any value where the market, say bumped it this good than another, y'all know it ain't stopping at no 4.5, 4.6. Where the market going if the numbers come in better than expected? Know where it's going? It's going right. It's going that's the 400 there, right? Y'all see right? And this on the weekly chart, so it's not gonna really give you the clean look version. But matter of fact, let me show you what I'm talking about on the clean version. Let's go to the daily, right? And then we'll go to the hourly. But I'm just going to show you this here just on the daily. You can see exactly what I'm talking about. Y'all see right here? Gap close here. Big landing purchase point at around that 4.645 because a $0.5 hold numbers. Right at the base of that bottom that top of that candle right there, 4.7. But outside of that, right into the zone right here. Right, what do you see right here? 410. It's going right to that 410 of nothing else. Minimum 410. Everybody else is going to be trying to price for 415. Because that's old resistance up here at 415, 415, 415, 416. Right? Between 414 and 416, that area. That's old resistance right there. You know they're going to be trying to play for that rocket zone. Right? You got some people that are going to be real overzealous. They're going to have 420s. Right? Good luck with those guys, but they just might print. Right? They just might hit. But see right here? Look right here. For Friday, look at them contracts for 415. Look at those contracts, 414 to 416. You see right there? $19.15 and what? Around about 10 cents basic. But you still got 5,000 open in. This stuff was bought Friday. All this stuff was bought Friday. I'm just gonna put 10 on it. I got 10 on it, bro. I got $15 on that strike price. I'll let it go to zero. Just in case, right? That's all they're looking at, just in case. And that's for Friday. So it's a lot of little things to look at and to think about. But again, a lot of it is just based upon the probability value, right? Given the nature of how the charts and the fundamentals kind of marry one another. Those data points that I put out, that you see down in my description box, things that you need to look forward to for this week right here. Let's come down here. What's going on, fellas? Snotball. Peace, pound, poverty, man. Peace, pound, poverty over rich. Be in the building. We see you guys. I'm just not coming over there to look at the YouTube side, man. Shout out to you guys today, man. Hope y'all doing well, family. Right? Be a little minute, but y'all know what it is, right? We're going to go to work when we cut this camera on, I'll tell you that. And so y'all know what it is. So current events right here, this is what you want to look for this week. We know the Federal Reserve meeting. We already know what's going on for the rate hike scenario, right? Big tech earnings, right? Those going to be a major drivers about where we are, right? If the markets are correlated to Snapchat and Twitter, woo. That's all I'm going to say. Woo. They better hope the market ain't correlated to them two because, how about that Facebook, right? How about that Meta, right? Woo. Right? How about that Google? Right? So just something to look forward to. Right, and there's a lot of other companies too got earnings as well. So it says S&P 500 earnings. That's just a lot of other industry giants that you want to look for. Some Dow, some Nasdaq, some regular spider components. So of course y'all know how to go pull that data up and see who all those companies are, what sector they're in. And then again, number 4, right? We got what? GDP and CPI, right? A bevy of CPI and GDP numbers. What comes out towards the end of the week, which will while much of this will be backwards looking, it may still give a hint of what's to come for the economy and the central bank behavior. We know that to be very true because GDP now is still pricing in negative GDP growth, which symbolizes that we're in a technical recession. Janet Yellen came out today and said she still don't see a recession. That's her trying to get ahead of the numbers. Typically, when they start doing something like that, that means they're nervous. I don't think things bad between us, and the chances are things bad between you because now you come out saying it. Right? Think about it. It's the messiest relationship ever between Wall Street and Main Street, right? And investors, right? Because everybody caught up in entanglement. They trying to believe things that are not true. And the reality is the people who are working the way they're supposed to be working properly because they're using logic and reasoning, those are people being safe. Why? Because they're being pragmatic. Markets don't care about your feelings, do they? They do not. Markets don't care about your feelings, right? It'll soon part ways. Your money will soon pass way with you because you operate on feelings as opposed to facts, primary information, pragmatic value, right? Cooler heads prevail. You got to think your way through it. We all could take a play out of that playbook. Markets can get you in your feelings real fast. I get it, but that's everything we're trying to do every day is better our discipline. That eliminates those kind of little small error decisions that get us in trouble. Right. So it says GDP expected to be positive, right? Which would avert the technical definition percent. It says hold up. Did I read that right? Now who put this in this article? GDP expected to be positive. What the heck? Somebody paid for that. That's a lie. Right? Because the Atlanta Fed bossed them got that thing at a negative, right? But we get it. We know people, spin on words and spin on trying to.
You talking about Janet? Right? Boy, she snuck that in.
She did. That might have been Janet because this article came out today. Of course, it came out today. So you know what that's about, right? Print that stuff. Print that. Yeah, run it. They run that press, right? So nearly 2 consecutive quarters negative GDP. U.S. core PC prices are expected to jump to growth to 0.5 month over month from 0.3. So they're saying PCE is supposed to be up because that's the data that the Feds use to read determine inflation. They read the core PCE. It's showing that it's supposed to be up. So that means it's going to be higher. So that means the Feds can't slow up rate hikes. So this is all over the place. But we know what's going on. We know the real numbers look like. We ain't got to play that game. Eurozone already fast bad numbers. They're getting worse. It's getting worse in Europe, obviously. And they got a heat wave hitting them across the back. Right? They're going to have a cold winter too. If Russia cut that oil. Shots fired. Right? They're going to be freezing over there, boy.
We're going to go back to cold.
Good luck. That's all I'm going to say. Good luck. Right. So it says number 5, Ukraine versus Russia development. Y'all know the latest news came out that they came up with a short-term treaty to open up the ports of Odessa to ship some of that grain that they have already in some of them silos that ain't spoiled quite yet, right? That was a win for Friday. Keep in mind, it came out on Friday. Go figure, right? And then it came out Friday and Saturday. And guess what happened this morning or late last night? What happened? Did y'all catch the news? The latest news over there?
No, I ain't catch that news.
Russia bombed Odessa. They bombed that same area where the port is at. But here's the deal. Y'all know they tried to inflate this actually saying that they actually bombed the port. They did. What Russia did, they bombed a warship that was out there in the port. Out there in the water and not the port area. Make sense? So it made it seem like they still bombing the port, right? Y'all know they tried to make it bad, worse than it is, right? What? They bombed the warship sitting out there in the water because they got strategic interest to get that grain out too, right? Because they got money involved in that. Y'all keep in mind, y'all know Odessa gonna be a Russian state once it's all said and done. They already took over Crimea, all that other stuff. They always said that they wanted to control those ports, right? That's old Russia. That's old Russia territory. Ukraine is a puppet state. It's not even a real country. That's so sad about it. People don't know history. They just going off what these people saying with NATO. That was a coup country. They built that out of off a coup. When the whole I ain't finna get into that. I'll come back another time. But y'all, we went over the same nothing to do. Right? But y'all get it, man. They want you all in your feelings so you can get you in that kind of draconian side with us, right? We on the right side of history. Ain't nobody wants to see people dying, but y'all know that's a civil conflict. Get out. If that's the case, y'all better fix your own house, right? Look at all the civil issues we have in America they ain't fixed yet. cut them checks, right? Don't get me to screaming that, right? They'll shut my page down for real. Don't play, right? Don't play, right? Don't you go worry about somebody else's house, you better worry about your own house, right? People better get their head out the sand and out the clouds and get real, right? Because y'all see what's going on. They've been stealing, they've been robbing, they know the money that people, are hurting that they don't have now, and they watching their money go what? Somewhere else right now.
Yep.
Think about that. You've ever vested interest in something, and you watching that person or this scenario mess over your scenario. Like make that make sense. Right? This is the foolishness of the world right now, boy. I tell you, boy. I keep saying every day. Elon, hurry up with them rockets, bro. Hurry up with the spaceship, bro. Right? Like this place is ratchet, bro. But that's what you want to look for, guys. Those are the top 5 bullet points, right? If you want the actual article for that, I'll post it here in the back chat here, guys. Y'all go read through it yourself, because there's more too. I just kind of cut through it because you can only post so much characters on these on these little pages. So I couldn't put all the data in there. All right, but let me post this right here, guys. So that's the article right there. Go pull that up on investing.com. Y'all know I definitely trust investing.com. It's solid. They solid over there, right? Good data over there, good primary sources. Go read into that, kind of get the gist of that. As you see, even right here, you're showing you some of the other big tech companies, not just tech, but industry giants that also have earned. Now, this one, NXPI, that's a big one. That's kind of like how Amazon is, right? The other big chip manufacturer, Amazon, the Dutch manufacturer, NXPI is kind of in that same boat, right? So that's one to watch. We definitely know what's going on with Whirlpool. Again, they more product centric. They do a lot of international business. So guess what? Forex currency rate exchange, you're gonna hit them. And supply chain issues still. I'm just saying. And then you got Tuesday, pre-market, you got Coca-Cola. Woo, staple company. Right? We saw what Pepsi did. McDonald's. Right? They got McDonald's, we got McDowell's. They got to go to Arcs, we got to go to Arches, right? We got to go to Arcs. Right? McDowell's, boy. But look at UPS. That's another one. Shipping, currency rate exchange, all that stuff too. Raytheon, defensive play. Lockheed Martin in that space. Y'all already know what it is. GE, same way. GM, right? They don't have that luxury like Tesla. I'm just saying, where it at, right? Visa Tuesday after hours. Chipotle, Stryker, right? Mondelez, staple company, right? They sell a lot of stuff. Ritz crackers, Oreo. Y'all know I like Mondelez in a lot of different ways. I've been talking about that for a little minute. Again, that kind of play. Texas Instrument, there we go. Chip player, another one of those ones to watch because of where Amazon, manufacturers like that, Microsoft, not Microsoft, Micron, AMD, NVIDIA, Texas Instrument. T-Mobile, what happened with AT&T the other day? Did y'all get the AT&T scenario? Oh no, was it T-Mobile? It was AT&T. That also hurt the market. They came out saying what? People stopped paying their what? Phone bills. All right, bro. How much did they love T-Mobile? Not enough to pay my phone bill. I'm supposed to put gas and food in my stomach. I'm straight. Right. I ain't paying that bill. See how that work? Bristol Myers Squibb. We know what's going on with that. Boeing. ADP, right? Now we're talking about payroll stuff, payroll numbers. Jobs are starting to get laid off again. Y'all know what that's about. Humana, healthcare. Big one there. Right? We just United Health had theirs last week, right? With the banks. Now Humana's up the bat. That's another big juggernaut on the healthcare side. Ford just came out with what? Job cuts. They laying off how many people potentially? With like 3,000, something like that? 3,000 workers, 8,000 workers?
Think so.
Potentially. Ford up the bat. Let's go. That stock already been pulling back off its highs of $25. It's all the way back down to near 10, 11 again. Round trip ticket. It was fun when it was all good, right? But now it ain't. Qualcomm, another big player. The battles that they've been having with Apple ongoing forever, right? They, have a unique business model though. That's gonna be interesting. ServiceNow, that's an interesting one. That's a very interesting one with ServiceNow. Part stores, that's a big one. Supply chain issues. We saw what happened with Fastenal. I actually played Fastenal in the earnings, right? O'Reilly kind of somewhat in that space a little bit. Not as pure play as Fastenal, but they're still in the automotive part business. And then Thursday, MasterCard, Honeywell International, right? Pfizer, Merck, we know what's been going on with them, lately, especially with the vax stuff and what that's all about. Comcast, right? Sub value to that of a Netflix, right? They got other aspects of their business though. They ain't stuck to just what subscription as a service. That's gonna be interesting. Altria, right? Cigarette company, right? We know what's going on with that. Philip Morris, right? They got hit with that FDA stuff, with that Juul cigarette stuff, but they got it reprieve, and they can actually still sell it for now. That's gonna be interesting. Thursday after hours, this one right here is very important. Intel. Why? Because this is all that $54 billion chip bill that they're trying to push through right now. Still more taxpayers' money to build this chip factory, but to give most of that money to Intel, supposed to AMD, NVIDIA, all that. See how there's crooked, straight crooked. Keep your eyes on Intel, right? And then you got a couple other off the beat path. Edward Life Sciences, Clay 10 Core, right? Dexcom, right? Exxon, or Friday, or Procter & Gamble, right? Consumer staple material. That's more industrial materials a little bit. Procter & Gamble, y'all know they make a lot of stuff, right? Procter & Gamble all over the place. A lot of product value, right? That's gonna be interesting. That's more, it's staples and a little bit of mixture, right? I would say it's a mixture, add mixture. Chevron, AbbVie, right? There we go. Somebody biotech, healthcare, whatever, AstraZeneca. And then Charter Communication, right? The telecommunication is this one here is gonna be interesting too, right? This Charter Communications. Right, it's a lot, man. It's a lot, bro. It's a lot, and that's just some of the big names. That's not even all the other companies that got earnings too this week that ain't even in that list. As you see, it has check full earnings on this right here. You go track and see what those other companies look like too. Right, there's off beat path one. That's the ones I'd be looking for. Right, I'd be finding them off the beat path one that Newmont Gold Corp. Right, gold's been beat down. Gold getting ready to rebound. I'm just saying, hint, hint, wink, wink. Not buying advice, but it looked like it might be getting ready to do something strange for a little piece of change. I'm just saying it's been beat up enough, and the dollar starting to pull back for now. But keep your eye on it. All right, we talking about five. We talking about that. We talked about Ryanair. That's another airline industry. Boeing. If Boeing do good, Ryanair might have some favorability too, right? Even with their earnings or whoever released first, whatever. Let me see what else real quick before we get out of here.
Missed one though. We really need to talk about TWTR.
Oh, well, I'm just saying that's kind of like what we were talking about with Snapchat, right? Because they had that same reality, right? But see, we already knew their money was going to be stagnant. Why? Because they had based everything they had going forward, and they started focusing on what? On the deal, right? Yep. They weren't focusing on no M&A, no merger, no R&D spending. They're like, we getting ready to get sold, so we ain't got to waste no money at this point, right? We trying to make money. So all the money they had was already backward money that they had priced in before the deal even came about, right? So even though we know they were going to have softness, the market said we're going to price that in because they're trying to get bought, right? Now the deal went south because we know there was a whole lot of infighting back and forth between them and Elon. But it really, in my opinion, the true barometer of that social specter was still going to be Snapchat. Why? Because they still in growth mode, right? They got Glass, all the other stuff. And it shed more light on the likes of Pinterest, Twitter, and Meta. But that was, in my opinion, they had more interest in Snap than I would say Twitter. You know what I'm saying? Because Twitter was kind of like already spoken for, right? It's like, man, she already spoken for. She ain't really finna, she ain't out there trying to turn no tricks. She ain't do nothing, bro. She kind of in escrow, right?
Escrow.
Yeah, she in escrow for now. So, Snapchat was that one though. That's why it dumped the way it did. Unfortunately, for a lot of the bulls, right? But again, I was on the put side, so I ain't complaining, right? 800%. But still, Facebook, they have the same model as Snapchat in terms of ad revenue. I repeat, Meta has the same model for ad revenue to Snapchat. Meaning they ain't got any exclusive other ad generators that each other don't have, right? They use the same people. So that's gonna give you a semblance of what Meta probably gonna look like. Only thing Meta got for to try to help it out is them little Oculus glasses and all that. We already know the metaverse is still a dump until it comes alive. So that's the only thing that they got. And people spend actually more on Facebook than they do on Snapchat. And they ran away faster from Meta than they did for Snapchat. Ain't that something? Mm-hmm. Because all the issues Facebook has, right?
Yep.
So they're like, look, and they got testimony getting ready to come up shortly with Sheryl Sandberg. She finna testify as against Facebook under that Cambridge Analytica scandal. That's coming too.
Boy, hold on,
bro. Right?
I missed that one. I missed it. She's gonna testify.
Yep, they got her a subpoena. She got to testify on that Cambridge Analytica scandal because she was very instrumental in that whole reality in terms of how they was stealing user data and selling it to third party people. not just in America, but remember UK overseas. Remember UK sued them too, right? They got 2 major laws. Boy, look, all right. Instagram ain't enough, right? All that Instagram stuff, Instagram, whatever. Look, bro. All right. So they got a lot of stuff going on. So, but yeah, y'all see the whole list. So y'all can come over here, invest.com yourself, click through some of the earnings. There's a lot. Of course, if you're on your earning whisper, you can come over here and kind of peel through some of the data, see what's favorable. It's a lot of companies getting a lot, right? A lot, as y'all see here, right? And some of these off the beat past ones are some that I definitely gonna have in my mind and radar on too, beyond some of the major, brand recognition name ones that you guys are seeing as well. And that was just that was just Monday, right? Look at Tuesday here, right? I mean, Tuesday gonna be rocking, boy. Look at Tuesday. Microsoft, Google, Visa, Louis Vuitton, Coke, McDonald's. I mean, this the top 12 alone, just 15 alone, rocking 3M. Look at 3M. Industrial, Dow component right there, right? They even got Walmart Mexico. Boy, Walmart Mexico even gonna drop them pesos on y'all. Right? Everybody gonna be rocking, right? I mean, it's a lot of credit. UBS, right? That's important. I mean, it's a lot. Centene. I mean, man, look, Kimberly Clark. Oof, yep. What's been happening in that space, right? Y'all know what's going on that side, right? Southern Copper. Ooh, copper been getting hit real bad lately, right? That one gonna be interesting. Corn and Picard, Deutsche Börse ADR, right? In terms of MCS, I mean, it's some names. Y'all know this stuff. I'll be here for days, right? But I just see them for what they are, right? So it's just like, man, these are some interesting scenarios here. Lamb Weston, right? Definitely know what's going on there. Logitech, gosh, yeah, some names popping. Boy, this week here gonna be, man, busy, and I'm gonna be all over the place. Skechers, now, my plate's so full this week. Ooh, bro. I'm just gonna hold on for dear light. All this say, but y'all send up an old lighter candle for me, bro. I got that a daycare do this week, man. Ilva got a business trip, military, so my hand's gonna be full, bro.
Nice.
So
do you focus on one stock, or do you focus on how many stocks you want? Like, do you have like a top 5 that you narrow your sights in, or do you just?
Well, that's how it kind of is, right? It's like you look at probability, right? I mean, it's always about probability. If you place in risk, you're looking at probability based upon which ones can give you a better favor risk reward, and it still has to deal with price value because you still scaling what you're willing to pay for certain too, right? Giving that up against open interest, giving that up against implied volatility, giving that up against certain sector scenarios, giving that up against what macroeconomic information that may hurt or hinder that stock or help it, right? All these different factors, when we kind of connecting those dots, that's what helps you kind of delineate where you really want to put risk on in some case. Now, you can't trade them all, of course, unless you got that hedge fund kind of money, right? But like you said, you're picking out those kind of ones that really stand out, right? Gotcha. And then if you have any funding money in between that, you say, well, I've been looking at this one too, and you have it to offer. Let's say you get a stock that you hit Monday or Tuesday. You make bank on that, exorbitant amount of bank, like I did with Snapchat, right? That's like, essentially what? 800% times 5, right? So that was literally around about what? I made like literally what? Ooh. You think about it, right? That's like what? 4,000%, because that's what it is. It's times 5. You take that kind of level of profit and say, well, okay, house money would literally puts me at $255. I mean, that's what I spent, right? Outside of that, that's 800% per contract. That means I pocketed over what? Well over what? 400 and then 400 some percent, right? 400 to 500%, right? $400 to $500 per contract. Make sense?
Yeah.
So since I paid 50 and I made over $400 per contract, right? You could like that kind of stuff, right? You're like, now house money again caps me at 251. Even at the point of 100%, that still puts me around about what? 500. That means everything else 400 plus times 5. That's like what? And two racks, right?
Yeah.
That's what you add. If you even if you pocket a third of that, that still gives you over, well over, 1,500 somewhere around there, give or take, that you can even parlay with up into other contracts, and you still pocket it, right? So I'm saying that to say you'll have that little extra if you want to go off the beaten path a little bit and try some of them down the line one, you'll have at least the opportunity to do so. Or unless you're not concentrating that bulk of that money towards what? Other ones that you want to trade and let that money be what? The money that you work with, right? See what I'm saying? That's your working capital. House money already been banked and profit been stashed. Now you're working on what? Just extra house money, right? And so if you can take on extra risk because you're able to kind of map through all those different extra stocks, then you do so. If not, stay within your lane. Don't go overboard. The goal is to what? Always what? Pocket more than you what? Have to put out in terms of risk. It's a game of aggregate, right? Base hits, right? Don't just make a lot, then test it all to see if you can what? Swing for the fences and give it all back. I always want to play from a place of being what? Ahead as opposed to from behind, right? Because it's a defensive market right now, is it not? Like you gotta what? Cherish the little gains you get now. Right. It ain't as easy as it was before. And that's what we said coming into the beginning of the year. This is a what kind of market? A picker's market. This is a picker's market. This is more defensive than you ever could think about being defensive, right? Because the market just, it ain't giving you a whole lot of room or error, right? You don't have a lot of error space. And so that's why it matters. But like I said before, being that this is the biggest quarter, in my opinion, as far as earnings for this cycle, this fiscal cycle, yeah, I'm looking for some major expansion in some areas. And if Wall Street's saying they really finna be that stubborn and fight the Feds, then they're going to have to prove it, right? You're going to have to turn this curve and say, screw the Fed, we're just going to buy the market, right? You're just going to be stubborn. Then that's going to be interesting, right? Right? That's going to be interesting. I'm like, yeah, prove it then. Y'all that bad, jump on out there, right? Because you're getting tightening and you're getting rate hikes and you got contracting GDP and you got other nations around the world. They ain't like they firing on all cylinders for you to feel that confident. Like, make it make sense, bro, right? That's what I'm saying. Make it make sense. In terms of how Wall Street trying to tell us that, they just know something that we don't, right? Or do they? I don't know, but it don't seem like to me, right? So for me, it'd be the same reality when I go to, think about risk. I need to kind of weigh those factors, right? And so up against certain sectors, we know which ones are going to be stronger than others. We know which one's going to be straight in trouble, right? They ain't got really no dog in the fight. They just got to hope investors don't sell them off just on the strength that they're in trouble. Right. And so those are the ones I'm really going to be looking at. Yeah, Spotify. Look at Spotify Wednesday.
Out of there.
Another one, right? That's another one. Keep y'all on line. All right, the little company that do braces and discretionary because you get your teeth right, I guess, but whatever. Right? Right? The way the market done kick you in the teeth, you have to go get them done, I guess, in this case. But a lot of little players, a lot of off the beat path players, man. A lot of little stuff here, man. Y'all see it. It's a lot of people. Man. Quantum Skate, the little battery play, they've been all over the place. It's a lot, man. But that's it, guys. So I got to get out of here, guys. I had a hard stop around by 8 because I got stuff to take care of here. Again, just a lot of information, guys. I hope it was useful. I hope it was add a little extra, meat to you guys' your plate here. Some stuff to look for. Dang, I didn't know you was out the room still, Chris. Y'all know I can't see that stuff if I'm floating there. My bad on that, over, Chris.
It's all good, over.
I need them 2 screen scenarios. But, that's for the most part, guys. That's what the market look like. So, as y'all see, I got my little Cat Williams up in the corner, boy. That's what the market going to look like all week. I'm like, make it make sense, bro. I had to bring the cat out. Had Cat Williams out, right? It is definitely going to be that kind of week because I look at it this way, right? With all the news that we got coming out, they expecting the market going to pull back. Most people are, right? But y'all know the market, boy, they're going to do everything in their power not to get that proverbial sell-off. So either we're going to get this right here, right? Either going to be that right there, close the market, bro. It's dumping, bro. We're going to get a limit down there. They're going to be like, close the market, bro. Somebody stop, somebody do something, bro. Close it, right? Right? Or the Bulls going to really be about that life, and they're going to be like, look here, bro. Say hello to my little friend, boy. Look, we got the Feds. They doing what they said they're going to do. Let's go, right? The Bears at the door, boy. The Bears coming, boy. And that bull, that one little bull is going to be one bull. There'll be one bull in there with that pump. Like, bro, I'm good, but I bought them swing calls, bro. We got it. So that's literally the market right there for this week. Either going to be say hello to my little friend or what? Close the market, bro. Calls going worthless, right? They done for, right? And so we ready though, nonetheless we ready, right? Or we're getting ready, right? I need that instrumental, right? The clean version where I can play. I'm gonna get that one. That's a good one there. That's where we at, guys. So outside of that, man, guard yourself, guys. Be patient, be prudent, right? As I said, trade safe, choose well, and stay green, my friends. Right?
Absolutely.
You got to understand that. I remember said it the right way. Choose well. Trade safe and stay green, my friends, right? Preparatory. Run that mantra in your head, guys, because that's what it's going to be. It's kind of market, man. It's going to be a weird one. It's going to be a good one. And just real quick before we get out of here, let's look at the futures real quick. I'm going to see where they at. Where we at? Let's go over the futures real quick. All right, because y'all know, again, I told you what the MOC was, right? Yeah, 1.3 billion to the buy side and 660 million to the sell side. That was just swinging into Monday, though, right? So that you got to take it like a grain of salt. But as of now, they're trying to hold the market from dumping. And there you go. Right now, we barely down on the Dow, down by what 10, 0.10 on the SPY here, and the tech is kind of only down 0.5. So tech kind of rip a little bit, trying. I mean, it's red, but y'all know this is actually good for the market, right? Because you don't want the futures ripping, right? You need to kind of be staying close to selling off or neutral much as possible all through the night. That gives Wall Street the opportunity to say, well, if we held, we can come in Monday and buy the mess out of pre-market and spark a rally, right? Or induce the ideal of a rally. That at least gives them potential to try to run back towards that supply zone resistance point around about 400, right? That old gap field, right? So that's what y'all want to look for, because we already see what the options look like. We went over that. Nothing new there. All right, we will be either way. We'll be ready, right? And so, wherever I can, I'm gonna try to add stuff to the rooms, like y'all know, man. I'll try to drop stuff wherever I can. Y'all been doing phenomenal, man. I'm just telling y'all, hats off to y'all, right? Because y'all really getting involved and dumping data, reading it, the stuff, and sharing it with the family. Again, that's the importance of community, right?
Right.
And I think that's how we all win. Ultimately, in the end, we all have a hand in the fire of trying to be better, individual, but also as a collective. All right. So hats off to you all with that. Thank you all again, everybody on the YouTube side too. We see you guys in the building. Shout out to you all. Over Rich, Miss Tamika in the building. What's going on, Ilba Tamika in the house as well? Happy to have her here. Over Snotball. Happy to see you here as well. Over Rich, Brother Mathis, Yoda in the building. We see you. Over Divine. Of course, all you guys. Miss Monica, she was in for a hot second. I know she's busy though. She stopped in through. So shout out to Miss Monica Lamb. Everybody in the family, crew, Camille, of course, Camille been very busy. We ain't seen in a minute, but y'all know we always got the fam close by. So shout out to her, over Marquise, everybody, right? Everybody, right? Everybody, y'all know everybody, right? Shout out to everybody, right? Just the fam, man, right? So it's all about growth. So hope everybody's doing well and staying focused and getting after this craft, right? We want to be better at this, right? Oh yeah, and special shout out to you again, Over Chris. Over Chris finally got his website up and popping, right? So y'all might want to go pay his website a visit. You might want to post in the back chat, Over Chris, if you can, man. Let people know where they can find you, man. You're growing, you're doing good things, man. You're doing what you're supposed to be doing. So we definitely want to highlight that, man. That hard work. So where can they find you, bro?
You can find me most actively on IG at Wall Street Logic, Facebook Chris Logic Woods, and my YouTube is Chris Woods, and then my website I will drop in the chat. Shout out to Mo and Brandon for assisting me on doing this, because I ain't gonna lie, making a website is so time consuming, and I see why people pay other people to do it. But it's pride when you do the work yourself.
Facts.
So I'm just thankful, for them and everybody, supporting and learning. Over AE, he will tell you that he used to be in the retail business. He still is a little bit from what I know, but
it's
it goes to show when you surround yourself with the right people, the success will show in others. So definitely shout out to OBE on all fronts.
It's shared interest. We pay it
we
for
always
it.
got your back, over.
We pay it for it. It's shared interest, man. I always say it's interest. It's all about them interests. I keep saying them permanent interests, boy. We want growth. And people that respect growth and see for what it is, they always hang by. They may not type a whole lot and say a whole lot, but they somewhere close in the wing, because everybody know they at certain stages in their life and what they're trying to accomplish. And the one thing above all things is the fact that when you get to a place when your money makes money for you, as opposed you having to go manage it every day, micromanage it, that's when we know we're doing all the right things, right? That's the ultimate value in that, right? That's ownership. That's like you're a solid investor in your own value, right? Your money working because you know how to hit all the right, chords or whatever to be in, in that position. And so, yeah, you just, your harvest is starting to come into fruition. That's what it's supposed to be about. Now it's about exalting it, and taking it even further. Like everybody, right? I mean, Brent, I heard you got some things going on too. Like a lot of little things like that. I just get excited when I see it and hear it because I know that's what we've been planning for, right? It ain't like it's like, when you think about people like, AIP to Kobe and Joe, right? You already know, right? Once them guys hit a point where you say, well, these guys know they're going to show up because they're just who they are. They put that aura out to let you know that they operate from a place of discipline and diligence. Period.
Mm-hmm.
You know, their work ethic is second to none. You know what you're going to get from them guys. They ain't slacking in the gym. They ain't slacking in practice. They ain't slacking, right? They giving you the same way they practice is the same way they play in the game.
Absolutely.
Right. They ain't gonna take it easy on you because you're a rookie. Like, no, Joe, you finna get them ankles checked in a minute. Get ready, get the trainer ready because we're finna take them ankles for a ride. Right.
Make sure you can slide them puppies.
Right. No, because they trying to They trying to bring excellence out, right? In their members, right? Their team, right? That's what experience does. So that's the reality in that, guys. So we just trying to build and make each other sharp, steel, sharp, and steel. In the discussion. That's where we at. And so I'm excited for that, man. So shout out to you all, man. Again, all the chat, everybody pay attention, watches us, like, share, subscribe again, hang out with us. Y'all know we go to work over here. We don't just sit up here and talk. We don't pontificate. We don't throw out, grandiose stuff. We ain't a pumper service. We ain't a signal service. We just go look at this stuff and say, hey, from our level of knowledge, this is what we work with. Does not make us gurus, whatever. We ain't trying to be better than nobody else. We just trying to say, this is what we work with. Under the guise of what we know, because some of you guys are a lot further along. Some of you guys at different levels. Doesn't matter. Why? Because everybody has their own individual journey. Right? Mm-hmm. Collectively, it's just about bringing something to the fold so we can all be like, oh, I didn't think about that. I'm gonna look into that now. Thank you for that heads up, bro. Right? Or assist. Right. That's what it's all about. Providing that layup, right? So I'm excited for that. So that's it, guys. So man, outside of that, man, you guys have a great, wonderful rest of your Sunday, man. I appreciate you all again in the back chat. All the family on the YouTube side as well. Facebook side. If you watch from Facebook, thank you all as well for tuning in. The family on Twitter, because I'm trying to ask make sure we keep Twitter close by as well. So shout out to all the family on Twitter as well. All the family from the Discord, all the other Discords out there. I appreciate you all, and that's it. So that's it, man. Any final words, guys, before we get out of here?
Always. Thank you for being consistent. Thank you, Chris. Thank you, everybody.
Appreciate you all, man. It's reciprocated. You already know what it is. All right. So shout out to the family.
Stay diligent. Stay diligent and keep at it. What you always say over. The next 5 to 10 years, you're gonna look back. You're gonna be like, "Hey, you came a long way."
Man, I always tell people that shit's scary. I always say that. 5, 10 years from now should scare you. You should be scared. Like, God, dog, bro. Right. I'm gonna be a beast. But 5, 10 years from now, that's how you should be looking at yourself. I'm gonna be a beast. Why? Because you ain't gonna let up and give up on what you're trying to do and building this, right? This ain't the only thing. You got other business endeavor. Chris got a lot of hands. It's irons in the fire, a lot of things. That's how this stuff does. It builds your business acumen up. That's all it does. It makes you a better businessman, a better person, period. So from there, other opportunities open up, and you just go for it, right? So that's what I love about it. Above all things, the research methodology, the discipline, right? And so it translates to a lot of other things in life that makes it better. Right? So shout out to that, man. Shout out to you all again. Hope y'all have a wonderful rest of y'all day. We'll see you guys in the market. Come tomorrow. It's gonna be a doozy. This is a big week. Like I said, it's a big week, guys. Get ready. So, what season is it right now? Again, what season is it?
Earnings season.
Say it with the chest open. It's what?
It's earnings season.
Let's go.
Calm down before you stress up the groove. The energy a little different when the blessings accrue. Hey, who you talking to? Just know I ain't no regular fool. Could be anything in the world, but I can never be you because I stand tall like I'm on my tiptoes, baby. You think a little too small. I got big goals, baby. Hey, where the money at? Look, I just need the info. Pronto, I go and get it and split it with my kinfolk daily, and I'm the type of that might change my number on you. Yeah, that's how you react when people took a slumber on you. Pretty brown skin, baby, I can see the summer on you. You see all the bread, and I know it make you wonder, don't you? I ain't surprised at all. Seen them rise and fall. Went up the mountain, it wasn't hard to climb at all. At the top, I found some relief. I finally got some peace. Carry on, but please don't mess up the moon. Yeah, I worked too hard for it. No, up at the top, it's a better view, in it? I'm not surprised at all, no it hey, what you need, come on, just pay the fee, I supply it all. Went up the mountain and it wasn't hard to climb at all. At the top I found some relief, you see, so please don't mess up the mood. Yeah. I worked too hard for it, no I need to beat it, oh you mess up the mood. Alright, ooh, I worked too hard for it, and I need it, so please don't mess up the mood. Don't mess up the mood. Don't mess up the mood. I worked too hard for it. Yeah. Don't mess up the mood.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Energy is fire, conversation is right. If you say tonight, baby, I might let you say all of me. Want you here, need your mind in these sheets. Completely intertwined in our minds, yeah. Tell your future like a psychic. Baby, you gon' end up right in my bed. Chemistry is science. I could play it cool, but I'd be lying. Read you like a psychic. I'ma tell you something, you gon' like it. Chemistry is science. Better than what you was fantasizing. Different kind of blue. Starry in the daytime. Found my living proof with you. I might lose all of me. Want you here, need your mind in the sheets. Completely intertwined in our minds, yeah. Tell your future like a psychic. Baby, you gon' end up right in my bed. Chemistry is science. I could play it cool, but I'd be lying. Read you like a psychic. I'ma tell you something, you gon' like it. Chemistry is science. Better than what you was fantasizing. future like a psychic. Baby, you gon' end up right in my bed. Chemistry is science. I could play it cool, but I be lying. Treat you like a psychic. I'ma tell you something you gon' like it. Chemistry is science. Better than what you was fantasizing.
All right, there it is, guys. You guys have a great evening. Peace, power, and profit. We'll see you guys. We'll see you guys tomorrow. Peace,
All
everybody.
right, peace, power, and profit.
Peace,
Peace,
family.
family. Peace, everybody. Have a great evening. Peace.
All right.